Good morning, students. Before we start with the class today, we would like to play a short video of 3 minutes, which is basically on our induction program for CA students, which is scheduled today at 10 a.m. in the morning virtually. And this, though we know that you are all our final students, but we want you to see and also to propagate this to your notes, whoever is doing CA foundation course, because this will be really very useful for them. We'll be doing a hand holding in that induction program, telling them what facilities we are going to provide throughout their CA journey. That's why this video will just brief you about that. And please, we request you all that you just propagate this to your students, to your knowns, your siblings or cousins, whosoever is doing the foundation course, are registered in foundation course. And let me tell you, students, this is today itself 10 a.m. in the morning virtually there. You students can see through the YouTube link, and that YouTube link will I'll share it on the chat box. Ajit will share it on the chat box. You can just ask your friends knows to attend that program. Okay, Ajit, you can play that video.
Yeah, yeah, ma'am.
Thank you, Ajit.
Yeah.
Students, please propagate this to the. I'll be sharing the link on the chat box. Okay, sir, over to you. You can start the class now.
Sure, ma'am. Thank you. I hope my screen is visible. So good morning, students. Welcome you all on the revisionary classes organized by Board of Studies of ICAI. Students, today we are going to start the asset-based standard, and which is Ind AS 16, a very important standard, property, plant and equipment. If I talk about from the...
Just a minute. Request you to just reach the date where one class has been rescheduled. Na? You just announce that also at the end of the session or in the between in between. Na?
Sure, ma'am.
The
Sure, we'll do
second
that.
June class, which we have preponed it on 31st May. Na?
Sure, ma'am. Sure.
So I'll be leaving. Huh? Okay, thank you.
Okay, no problem, ma'am. Yeah.
Good
So
morning,
students,
sir. Good morning, sir. Is there any class pending for Ind AS 115?
so that will be rescheduled. Yes.
Okay. Thank you, sir.
Yeah. So we have decided to reschedule that class so that, the future program will not be disturbed. Okay.
But it will be updated by today.
Sure. Yeah. So student, this standard property, plant and equipment, this standard is very important from the examination perspective. And this standard is very important from the real life perspective also. You can't find any balance sheet. I'm talking very generally. So in 99% cases, you will find property, plant and equipment in the balance sheets of the company, right? So if there is a company, there is a business which is running on, of course, there should be a property, plant and equipment. There must be a property, plant and equipment. And hence, this standard is having a vital importance from the real life perspective as well as from the examination perspective. Friends, this standard also creates a base for understanding Ind AS 40 investment property and Ind AS 38 intangible asset, because many topics are common in Ind AS 16, Ind AS 38 and Ind AS 40 also. So whenever you revise, whenever you understand, whenever you listen, whenever you watch, whenever you read, so please read the standards Ind AS 16, Ind AS 38, Ind AS 40 in a portfolio, so that when you complete Ind AS 16 and go to Ind AS 38, your almost 50% of the Ind AS 38 has already been covered. Almost 50% of Ind AS 40 has already been covered. And when you are reading Ind AS 38 and Ind AS 40, probably you are also revising Ind AS 16, at least 40-50% of Ind AS 16, right? Since these are the revisionary classes, so my basic understanding is you guys, can you please keep on mute? So guys, can you please keep on mute? Otherwise, people will get disturbed. Okay. Yes. So friends, while these are the revisionary classes, so my understanding is you have gone through with the original class, the detailed class, which has been conducted on Ind AS 16, right? So in the today's class, I'll pick some concepts, I'll explain the concepts, and I'll solve 5 to 6 questions from the study material, which are having the complex, application of Ind AS 16. Students, Ind AS 16, any asset-based standard, it has 4 parts: recognition, measurement, presentation, disclosure, RMPD. So we are going to talk about the recognition. The recognition means, what is meant by recognition? Recognition means when to recognize, right? Whether if you have expensed any amount on acquisition of property, plant and equipment, is it a property, plant and equipment? For example, a company has purchased a machinery from China. Okay, the company is located in Delhi and the company has purchased machinery from China for rupees 1 crore. What is machinery? Machinery is a fixed asset. It is a property, plant and equipment. When the company has purchased machinery and when the machinery entered into the factory of the company, right? At that point of time, when the machinery was in the process of installation, the government has banned the output from that machinery. Now, my question is whether that machinery is going to be recognized as a fixed as a property, plant and equipment.
No.
Whether that
No, sir.
machinery is going to be recognized as a property, plant and equipment.
No, sir.
Why no?
So there, if it is banned, there is no value of that machinery now in our books.
So how
It's
will
like
you
a sunk
support your
cost.
answer? If this question will come into the exam, how will you support your answer? You are saying that you are not going to recognize that machine as a property, plant and equipment because what was the justification? This machine is a property, plant and equipment. Machine is a fixed asset, right? So what is the justification? Why not to recognize that machine as a property, plant and equipment?
Property, plant, equipment is an assets which will benefit us in future in many
Yes,
years. But
yes.
now this is a yeah. Now this is a banned and this is like a this is having no value now. So that's why we will not record it as a property, plant.
Yes, so you have explained it right. So basically, asset are those element of the financial statement. Asset are those item which will give us future economic benefit. It will benefit us in future economically, right? So one can argue, sir, if that machinery will not give the future economic benefit, I mean to say in terms of producing the output. Why? So it's not like that machine will not be able to produce the output. The point is, even though if machine will produce the output, that output is already banned by the government of India. So what you will do by producing that output is no more sellable. The company will not have any future economic benefit. I mean to say the company is not able to get benefited in future economically. Understood? Yeah. So friends, one can argue that, sir, that machine can be sold as a scrap. Okay. So what do you think that the intention or to acquire the machinery is to sell as a scrap? Of course, answer is no, because the intent from the machinery is to produce the output. So selling at a scrap amount is not giving you future economic benefit. It will not give you benefit economically, right? So if you purchase something at, let's say, 1 lakh rupees, and if you will sell that item as a scrap, it will give you hardly 5,000 rupees or maximum 10,000 rupees, right? Correct? So friends, and hence if I talk about a property, plant and equipment, a property, plant and equipment will be recognized as an asset if future economic benefit is probable and cost can be measured reliably. So you know the cost and the future economic benefit is certain, then it is going to be recognized as a property, plant and equipment. Sir, if the property, plant and equipment has already been recognized, okay, the company was producing the output, and after 1 year, the government has banned the output from that machinery, then what will you do? In that case, what you will do, since the machinery is already recognized as a property, plant and equipment, then you have to review, reassess at the end of every reporting date that whether the machine is impaired or not, the property, plant and equipment is impaired or not. The impairment testing has to be done, and this government notification is one of the external indicator to tell you, please assess the market value, recoverable value of the machinery, value in use of the machinery, and then you will charge an impairment loss on that machinery. The value of the machinery will significantly go down, right? And you have to take a hit of impairment loss in your P&L. I hope this is clear. So friends, when I talk about recognition, we will discuss quickly what is the definition of property, plant and equipment, right? Then what is the recognition criteria for initial cost? Initial cost means on the date of acquisition, on the date of purchase. Subsequent cost means subsequently, once you have already capitalized the machinery, capitalized the property, plant and equipment, and now you are spending, now you are spending subsequent cost, for example, day-to-day servicing cost. So what will be the treatment of day-to-day servicing cost? Is it going to be capitalized in the machinery?
It will
Answer
be
is-
charged to P&L
It will be
account.
charged to P&L. It will be charged to statement of profit and loss. But what happens if there is a major expenditure on account of maintenance, overhaul, replacement? If there is a major replacement cost, for example, in a truck, in a car, the engine was replaced in the car, the engine was replaced in the truck, the turbine was replaced in the windmill, right? In that case, what will happen? The
Then it
major
will be
replacement.
considered. It will be considered as a subsequent cost, and it will be shown in a balance sheet because it has a future economic benefit for many years. That's all.
But the servicing cost has also future economic benefit. If you will not get your car service, you will not be able to run your car.
We cannot earn any additional revenue because of maintenance, but when we purchase a new equipment, then we can earn additional revenue, because of which we will capitalize it.
So basically, the earning the revenue is not the criteria only. So basically, it's more about future economic benefit. Additional revenue is not the criteria. Okay. So if you are spending a major expenditure on account of major amount on the account of replacement, inspection, maintenance, that major amount has to be capitalized as a part of the property, plant and equipment. Why? That major replacement cost, major maintenance cost, major inspection cost will give you future economic benefit for more than a year, right? Like day-to-day service, it has to happen almost a day, every day, right? If it is a regular service at the interval of, let's say, car service, it has to happen every year. Okay. So this major cost is going to be capitalized as a part of the property, plant and equipment. Why? Because the initial cost and the subsequent cost both are meeting the same criteria for recognizing it as a property, plant and equipment, right? So friends, so let's move into the up to the recognition criteria, then we'll come to the measurement criteria. What is the definition of the PP? And you will understand when I'll discuss the definition of PP. So PP is a tangible item. It is a tangible item which is held for use in the production or supply of goods and services. So tangible item which you can touch, you can see, you can hold, right? The tangible item which is held for use in the production or supply of goods and services, which is held for rental purposes, held for administrative purposes, and is expected to be used during more than one period, which is like more than 1 year, right? So day-to-day servicing cost, regular servicing cost, yearly servicing cost, these are not move for more than 1 year. Okay, or small cost you cannot capitalize, otherwise the company will take a benefit of capitalizing everything in the property, plant and equipment. Okay, so friends, if a tangible item is held for use in the production or supply of goods and services, what is the example? For production means machinery, supply, truck. Okay, rental. Now I'm asking you a question, and here the students got confused in examination. Why? Because a proper revision was not there. Friends, a company has acquired a building, a company has purchased a building, and the intent from the building was to earn rental. Okay, so the company has purchased a building from the surplus funds, and the intent was to earn rental. My question to all of you is whether that building is property, plant and equipment. It is meeting the definition here. Whether it is a property, plant and equipment.
If company is engaged in the business of rental services, then it is a property, plant equipment.
Okay. No, if the business is not to earn rental, for example, then what will happen? Then what will happen? Then it is an investment property. Ind AS 40. Land and building held for earning rentals are classified as an investment property. Land and building held for capital appreciation are classified as investment property, right? Then there is an exception in Ind AS 16. If land and building which is held to earn rentals are classified as Ind AS 40, investment property, there is a separate standard. Just think about that standard, right? When you appear in the examination, probably you must have at least minimum 1 or 2 revision before appearing in the examination. So think about Ind AS 40. Why there is an Ind AS 40, right? So friends, then this standard is talking about which kind of rental? This standard is talking about which kind of rental? For example, many companies are taking this, coffee. Have you seen coffee vending machines in the offices? The CCD, Cafe Coffee Day, Costa was written, that red and black machine, coffee machines.
Yes, sir.
Yeah, in the offices. These companies are getting these machines on rental basis. They are paying rent. For example, if you visit Reliance, TCS, Infosys, probably you will find these kind of machines in their cafeteria. Okay. So what they have done, they have taken these machines on rental basis from Cafe Coffee Day, right? Now, what is the nature of these machines in the balance sheet of Cafe Coffee Day? Tell me.
It is an asset.
You are the
It
CA
is an
final
asset
student. You are the CA final student. Of course, machine are the asset, right? Even this 11th class student can also tell you this is an asset. My question is, which kind of asset? There are a lot of asset in the balance sheet. Which kind of asset? It's a property, plant and equipment. Yes,
Yeah.
it's a property, plant and equipment, right? So in the balance sheet of Cafe Coffee Day, these are the tangible items which are held for rental purposes, and the life is more than 1 year. Correct? So friends, this rental, this standard is talking about for other than, land and building, So like if company's business is to land machineries, right? So in that case, those machineries, those assets are also classified as property, plant and equipment. A company is into the business of renting cars, right? And the other companies are taking these cars on a lease basis, on a rental basis. What is the nature of the cars in the balance sheet of this company, which is providing the cars on a lease basis? प्रॉपर्टी प्लांट एंड इक्विपमेंट. थिंक अबाउट जिसका एसेट है उसकी बैलेंस शीट में उसका नेचर क्या होगा. जस्ट थिंक अबाउट to whom the asset belongs, what is the nature of that asset in his balance sheet. So in that case, you need to look at the definition of PP. The definition of PP says that if it is a tangible item which is held for either use in the production or supply of services or for rental purposes or for administrative purposes, and which is expected to be used during more than 1 year, then it will be classified as PPE. More than one period, then it will be classified as PPE, right? So friends, this is a very small case study. I'm not getting into that. Recognition criteria. When an item which is spent by the company is recognized as a PPE, right? So when two conditions will be satisfied, future economic benefit should flow to the entity and cost can be measured reliably, okay? And cost can be measured reliably. Why the word was used future economic benefit and not the future benefit only? Because that benefit should flow to the entity economically, right? Because one can say that, sir, I have purchased machine at rupees 1 crore. Probably I will be able to sell that machine at 20 lakh rupees. Okay. So whether you are getting benefited economically by selling that machine as a second hand or as a scrap, answer is no. Your intent was to, if you have purchased at 1 crore rupees, your intent was to produce, was used in the production for at least 10 year, 20 year, 5 year, and then earn the money out of the use of that machinery, right? So what is the recognition criteria? The recognition criteria is future economic benefit should be probable and cost can be measured reliably. Friends, if it is a spare part, standby equipment and servicing equipment, it will be classified as a PPE if it is meeting the recognition criteria and definition of the asset. For example, the company has a loose tools, jigs, dies, right? Small like lubricants, consumables. So whether these kind of items are classified as PP, answer is no. Why? Because of course these are the tangible item which is also used in the production of the goods and services, but the life is not more than 1 year, right? These consumables are getting used in a week, 2 days, every day, right? So the life is not more than 1 year, and hence those consumables are classified as an inventory, not a PP. But if there is a standby equipment, the life of which is more than a year, you are putting that standby equipment, you are putting that spare part into the machinery, and that is going to be replaced after 2 years. So that spare part standby equipment is meeting the definition of PPE, okay? Subsequent cost, my dear friend, standard says that once you already acquired the property, plant and equipment, and then you are spending major amount in the maintenance and inspection of that property, plant and equipment. So standard says that those kind of major replacement cost, inspection cost, overhaul and maintenance, those are going to be capitalized as a part of the property, plant and equipment. Very, very, very important. Friends, if the complex question will come, it will come for the component approach. What is the component approach? It says that major inspection cost, major replacement and maintenance cost has to be classified as a separate component, and it has to be depreciated separately over the useful life of that particular component. So friends, standard says that for subsequent cost, the same criteria is there. Right? Future economic benefits should be probable and cost can be measured reliably. Let me explain this with the help of one example, then I'll come to the question which is shared with all of you. Friends, for example, the company has acquired a truck for rupees 25 lakhs. The life of the truck is, let's say, 20 years. Life of the truck is 20 years. Or for the sake of simplicity, take it as a 10 years. The life of the truck is 10 years. What is the value of the truck? 25 lakh. Assuming residual value is 0, what is the depreciation per annum on this truck? 2,50,000. And students, I would request all of you, please participate, engage, and answer your question on the chat box, right? answer your question in the chat box. Not to worry, I'll read the chat and I'll take your name and I'll answer the question as well. Okay. Yes. So 25 lakh is the cost, useful life is 10 years, 2,50,000 is the depreciation. When this company has purchased the truck is roadworthy, the truck is fit and fine, and the company is able to transport the goods from factory to the customer place or to the retailers. Now, after 6 years, the truck met with an accident and the major maintenance and replacement happens, and the engine got damaged, and engine was supposed to be replaced at the end of the 6th year, right? My dear friends, replacement of the engine will cost to the company around 10 lakh rupees. The purchase price of the truck was 25 lakh rupees. Life was 10 years. And at the end of the 6th year, the truck met with an accident. Now the engine is supposed to be replaced. And the replacement cost of the engine is 10 lakh rupees. Friends, whether this 10 lakh rupee has to be expensed off or this 10 lakh rupee has to be capitalized.
Capitalized.
Okay, it has to be capitalized. Why? It is a subsequent cost. It is a major replacement cost, and hence it is going to be capitalized. And before answering that it is going to be capitalized, we need to look at the recognition criteria. The recognition criteria is same like initial cost, which is future economic benefits should be probable and cost can be measured reliably. We are aware about the cost, which is 10 lakh rupees, and whether the replacement of this engine will give the future economic benefit. Answer is yes, because if you will not replace the engine, you will not be able to run the truck, right? So once you replace the engine, the truck will become roadworthy, and again the company will be able to transport the goods and earn the money. Now the question comes, don't you think? You have answered that this engine is going to be capitalized in the truck. Don't you think when you have initially capitalized the truck as a PPE, that truck was also having an engine? When you purchased the truck, there was an engine in the truck. Yes or no?
Yes.
So when you again capitalize this truck, don't you think this truck will have two engines now? And one engine is running. So the truck inside the truck don't have two engine, but in your balance sheet, in your fixed asset register, the truck will have two engine. One, when this truck was purchased, the engine has come along with the truck. It was part of the truck. And now you are separately purchasing the engine and installing in the truck. So in your balance sheet, you will have two engines in the truck. In your physically truck, there is only one engine.
So one is damaged, no? And then we will sell it as a scrap value.
So it means you are saying the original engine, which was part of the truck, is going to be derecognized, decapitalized, right?
Yes.
Right? This is what you are saying. Answer is yes. So friends, you are right. The engine, the major replacement cost, why you are incurring a major replacement? Because the old component is no more useful and you are installing a new component, new major component. If it is a separate component which you are installing, capitalizing as a part of the PP&E, it means you have to derecognize the old component and you have to recognize the new component as a part of the PP&E, right? As a part of the property, plant and equipment. Now the second question came, sir, we know the cost of the new component because we are acquiring this new component separately after 6 years. Sir, but when we have acquired the truck, we were not aware about the cost of the engine. And we have paid the entire 25 lakh rupees. We have paid the entire 25 lakh rupees as a purchase price of the truck as a single invoice. Now the question is, how do I recognize, how do I measure what was the cost of the old component and how much I need to derecognize? Because what I have done, I have recognized 25 lakh rupees as a cost of the truck. I have depreciated 2,50,000 rupees every year. And till now, end of the 6th year, I have depreciated 15 lakh rupees. 2.5 lakh multiplied by 6. I have depreciated 15 lakh rupees. Now the net block of the truck is coming at 10 lakh rupees. And now I'm also incurring a major replacement cost on engine of 10 lakh rupees. So how will I de-recognize the old component, old engine? At what value?
0.
0. I'm not expecting this answer.
So actually, if it is if it is will be valuable, or it will be, you can say ki it will be working, then why we will buy a new engine? And obviously
No, I'm not
it's
saying
not
that.
having.
I'm not saying that. Right. So I am asking, when we have purchased this truck, there was a gross block of 25 lakh rupees, correct? Cost of 25 lakh rupees. And the truck was having engine also. If this accident would not have happened, this engine was running fine, and we will continue to depreciate this truck, entire truck, at 2.5 lakh rupees per annum. But at the end of the 6th year, the truck is perfectly fine, but this engine require replacement. Okay. So now I need to measure what was the price of the engine when I bought the truck 6 years back. Okay. Then I should depreciate it. Then I should come to the net block and I should de-recognize the net block. So the question was that, right? The question is, when you have to de-recognize the asset, the question is not that if this asset was perfectly fine, then why should I go for a new asset? That was not the question. For example, you have purchased the car for rupees 15 lakh. The life of the car was 15 years. After 9 years, if the car met with an accident, okay, and now you are selling the car at a scrap value, but probably the net block of the car at that point of time was 9 lakh rupees. क्योंकि 15 lakh रुपए cost थी, 15 lakh is the cost. Every year you are depreciating 1 lakh. At the end of 9 years, it was 9 lakh. So you are de-recognizing 9 lakh rupees and you are taking a loss on the sale of car as a scrap. So the question is, how should I arrive at a value which will tell me that this was the cost of the old engine and this is the net block of the old engine at the end of the 6 years? Abrikesh, you are right. Abrikesh is saying at new engine price, less depreciation for 6 years. Answer is partially correct, partially incorrect, Abrikesh. So friends, standard says that whenever you are incurring a subsequent cost, for example, major replacement and major inspection, so you have to capitalize this major replacement and inspection cost, but you have to decapitalize the old component of the replacement and inspection, maintenance and inspection. If you are aware about the old cost, then of course you would have depreciated separately. But if you are not aware about the old cost, then use the new cost and arrive at the old cost. If I know what is the cost of the engine, which is 10 lakh rupees at the end of the 6th year, which is today, can I arrive at using 10 lakh rupees? Can I arrive what would have been the cost 6 years back? Can I
Present value
arrive?
factor.
Sorry?
Present value factor.
Present value factor. Very good. If today something comes at 10 lakh rupees, what was the present value of this 10 lakh rupees 6 years back? Means, so one thing is very clear. So whatever is the value of 10 lakh rupees today, of course, 6 years back, it came with a lesser value. Hoga na?
Yes, sir. Yes,
Yes.
sir.
So what should I do? Using a present value factor, using a discount rate. If I discount this 10 lakh rupees 6 years back, it will give me a present value of rupees 10 lakh 6 years back. For example, it will come at 6 lakh rupees, for example. Then what was the cost of the truck when you purchased this truck 6 years back? 25 lakh rupees ना? मैंने बताया था ना 25 लाख रुपए.
Yes, sir. Yes, sir. Yes, sir.
So 25 lakh rupee was the cost of this entire truck. And what is the cost of the engine using the present value factor of the today's price?
6 lakh.
6 lakh rupees. So at the inception date, you got the cost of the engine, which is 6 lakh rupees. So what is the cost of the truck other than engine?
15
19
lakhs.
19 lakh rupees. 25 minus 6, 19 lakh rupees. So now I got the two component. Okay. So let me use my Excel. Let me use my Excel to revise this concept. Okay. Let me use my Excel. So let's say cost of truck 6 years back when purchased, it was 25 lakh rupees. It was 25 lakh rupees. Okay. And cost of new engine, it is 10 lakh rupees. Okay. Assuming discount rate is how much? Let's say 10%. Assuming discount rate is 10%. Okay. So tell me, what is the cost of old engine when truck was purchased? कैसे निकालूं? Can I say 10 lakh divide by 1 plus 10% to the power
power 6.
6?
Yes, 6.
564474. So now engine component and other than engine. So this is my truck in the fixed asset register. What is the total price of the truck? It is 25 lakh. The total price is 25 lakh, right? It is 25 lakh. And what is the engine component? What is the other than engine? 25 minus this much. This is the gross block. You understood how I have arrived at 564474? So these are the
Yes.
Excel working, right? So I'm working today. The today cost is 10 lakh. So what would have been the cost 6 years back? So I have arrived at a present value. Okay. Now what is accumulated depreciation? What is accumulated depreciation? What is accumulated depreciation? 6 years का depreciation कितना होगा? आप अच्छा मुझे ये बताओ, life was 10 year. Example, useful life is 10 year. Useful life is 10 year. So the cost was 25 lakh. What should be the total depreciation at the end of 6 year? Total depreciation कितना
15
हुआ?
lakh.
Sorry,
15 lakh.
15 lakh.
15 lakh.
2.5 lakh multiplied by 6. The total depreciation is how much? The total depreciation would have been 25 divided by 10 multiplied by 6. 15 lakh. Now, what is the breakup of 15 lakh? Same way, this divided by 10 multiplied by 6, right? This divided by 10 multiplied by 6. What should be the total? What should be the total? कितना आना चाहिए टोटल? टोटल कितना आना चाहिए? The total should be 15 lakh. 15 lakh आ गया. What is the net block? भाई total depreciation 15 lakh ही था ना? 2.5 multiplied by 6. What is the net
10
block?
lakh. 10 lakh.
The net block should be 10 lakh rupees.
10.
So what is the net block of engine component? What is the net block of engine component? 225790. What is the accounting entry? What is the accounting entry? New engine component account. New engine component. PP account debit. Debit. By what value? By what value? 10 lakh. To bank. To bank. Credit. 10 lakh. And what about the old engine? Two old engine component. PP credited. क्रेडिट करेंगे ना, एसेट है, किस वैल्यू पे क्रेडिट करेंगे?
225.
And what will be debited? What is going to be debited? Loss on
Loss.
on replacement of engine. Debit. Assuming the old engine sold at scrap value and assuming the old engine sold at scrap value and 50,000 rupees is received. Now what is the accounting? What is the entry?
Bank account debit, loss on sale, replacement of
Bank
engine
account
to old
debit.
engine.
Very good. Bank account debit.
50,000.
Loss on replacement of engine debit. To old engine component PP credit. Right? The credit is same, old engine component. This will be credited.
225.
Bank account will be debited. Now what is the loss? The loss is
175.
175,790 is the loss. So this is the accounting of subsequent cost, right? If you're not aware about the cost, you have to take the new cost as a base and you have to compute the old cost for that component. Shweta, you have any question? Shweta, you have raised hand.
No, sir.
Okay.
No, sir, I am not listening.
Okay, no problem. Yes. So friends, now let's go to the question on the Word file. Whether my Word file is visible? Is it visible?
Yes, sir. Yes, sir.
MS Limited has acquired a heavy machinery at a cost of rupees 1 lakh. With no breakdown of the component parts. Just like this truck and engine. Right? So this company has purchased a heavy machinery at rupees 10 lakh. What is the accounting entry at the time of purchase?
PPE to bank.
Yes. So machinery PP account debit to bank account 10 lakh rupees being machinery purchased. The estimated useful life is 10 years. Assuming no residual value, what is the depreciation? If the life is 10 years?
1 lakh.
1 lakh rupees. At the end of the 6th year.
Sorry, sir.
ये भी 6 year का आ गया. One of the major component, the turbine require replacement as further maintenance is uneconomical. It is saying that maintenance करा के कोई फायदा नहीं है. So at the end of the 6th year, one of the major component, the turbine require replacement as further maintenance is uneconomical. So at the end of the 6th year, the gross block was 10 lakh. What is the total depreciation? Accumulated depreciation by end of the 6th year?
I think it's 1 CR.
Sorry, it's 1 CR. Yes, it's 100
And
lakh.
depreciation is 10 lakh.
So depreciation is 10 lakh rupees per annum. Yes, it's 1 CR. So the gross block is 1 crore. Life is 10 year. So every year depreciation is 10 lakh rupees. What is the depreciation by end of the 6th year? 60 lakh rupees.
Yes, sir.
So what is the net block at the end of 6th
40
year?
lakh.
40 lakh.
40 lakh.
Gross block 1 crore. Accumulated depreciation 60 lakh and net block 40 lakh. and this at the end of the 6 year, this turbine require replacement, which is one of the major component of this machinery. The remainder of the machine is perfectly fine and expected to last for next 4 years. Other than turbine, other than this component which require replacement, the entire machinery is perfectly good, in the good condition. The cost of the new turbine is 45 lakh, discount rate is 5%. Analyze whether cost of the new turbine can be recognized as an asset, yes or no? Whether this cost
Yes.
of new turbine will
Yes,
be
as a
recognized as an
separate
asset.
component.
Yes, it has to be recognized as an asset. It has to be recognized as a PP. As a part of the PP, the subsequent cost is going to be capitalized. If yes, then apply the accounting treatment. What to do? I know the cost of the new turbine, which is 45 lakh as of today, as of the end of the 6th year. But I don't know what was the cost of the turbine when this entire machinery was purchased on the day one.
So discount rate is given. So we can consider the discount factor, and then we can calculate the cost at before 6 years.
Okay, so are you saying I need to compute the present value
Yes.
of turbine, right? 6 years back, using the current replacement cost. This is what you are saying.
Yes, sir.
I can use the formula 45 lakh divided by what? 1 plus what percent?
5%.
5% to the power
6.
6. This will give me the present value. So
Yes.
what is the present
33.
value? Let's say the present value is how much? It is coming out at
33 lakh 57,900.
33,57,900. So I got the present value 33,57,900. Now what to do this with the present value?
So we can
33,57,900. Yes. So what to do with this with present value? So the entire cost was 1 crore. Now you know the cost of this turbine component. So 1 crore minus 33,57,900. The remaining will be the part of other than turbine. Okay. So now you have a
So
breakup of 1 crore rupees.
we will calculate the depreciation on that part, and
Yes.
we will subtract from this, and rest will be a loss on sale of it, loss on replacement
Yes.
of assets.
So what you will do? So now you have got the cost of the old turbine when it was purchased. Okay. When the machine was purchased. So 1 crore minus 33,57,900 is the other than turbine, the entire cost of machinery, and the cost of turbine is 33,57,900. You have to compute the accumulated depreciation by end of the 6th year. So divide by 10, multiply by 6. The total depreciation comes out at 60 lakh rupees, which has already been charged to the P&L, right? And now you got the net block. Because why there is a net block on the turbine? Why? Because you have estimated the life to be 10 years, but this require replacement at the end of 6 year. So the 4-year portion remained as a net block, correct? So that will be charged to the P&L as a loss on replacement, and the new turbine cost will be capitalized as a gross block of the machinery, and the old turbine component is going to be decapitalized, derecognized, right? So what is the solution? Same. The new turbine will produce economic benefit to MS Limited, and the cost is measurable. Hence, the item should be recognized as an asset. The original invoice for the machine did not specify the cost of the turbine. However, the cost of replacement of 45 lakh can be used as an indication, usually by discounting of the likely cost, which is 6 years previously. If an appropriate discount rate is 5% per annum, discounted back 6 years amounts to this. That is the approximate cost of turbine before 6 years. So we have computed the 6 years before turbine cost. The current carrying value of the turbine which is required to be replaced is 1343,160. Would be derecognized from the books of the account. कैसे आया 1343? Original cost 33,57,900 minus 6 year accumulated depreciation. right? Is that clear? The cost of the new turbine is 45 lakh, which has to be added to the cost of the machine, right? Resulting in a revision of carrying amount of machine to 71,56,840. And ये number कैसे आया? ये number कैसे आया? That is 40 lakh. 40 lakh is the total net block of the machine at the end of 6 years minus 1343,160 is the net block of the old turbine plus 45 lakh is the cost of the new turbine. Okay. So this will become the revised cost at the end of 6 years for the machinery, including the new turbine. So what is my original cost of the machine? 1 lakh reduced by the accumulated depreciation, 60 lakh. I hope this question is clear to everyone. I hope this is clear to everyone. Any question on this question? Same like truck and engine. Any question?
No.
Anyone has any question? Okay.
No, sir.
Okay, perfect. So friends, now we understood this part and this MS Limited question we have done, right? Now talking on the measurement. So once you recognize the initial cost, subsequent cost, right? So first you will recognize initial cost, subsequent cost comes later. At what value? So you understood that you are going to recognize this as a PP. Now, at what value it is going to be recognized as a PP? So PP has to be measured at cost. Initially, PP has to be measured at cost. What is the definition of cost? Cost includes purchase price plus import duty plus non-refundable tax minus trade discount and rebates plus directly attributable cost plus estimated cost of decommissioning, dismantling and removing the PP. You have purchased a laptop for 50,000 rupees plus GST of 18% and you have paid 59,000 rupees to the vendor, to the shopkeeper. At what value you are going to capitalize the laptop in your books of accounts?
50,000 because GST is available as input credit.
Discount and rebate. I have purchased a laptop for rupees 50,000. I have also paid a GST of 18%, which is 9,000. I have made a total price, I have paid a total price of 59,000 for purchasing my laptop. At what value I will recognize this laptop as a PPE?
50,000.
50,000? Why not 59,000?
Because GST we can claim as the ITC, input tax credit.
Yes. So friends, if you will claim any taxes which you can claim as a refund or as an input credit, that will not form part of the cost anymore, right? The only thing is you have paid in advance and now you will get the credit or you will get the refund. So that is no more. Only those cost of taxes which are non-refundable in nature, non-inputable in nature, that will become part of the cost of the asset. Okay, that will become part of the cost of the asset. If in the examination question is silent, okay, if in the exam the question is silent, in that case you have to take an assumption. You have to take an assumption that this cost is. Am I audible? Am I audible?
Yes, sir.
Okay.
Yeah.
So in the examination, if the question is silent, then you have to take an assumption whether you have taken the assumption whether this will be whether the input credit will be availed or not. Okay. So normally in GST, you can say that assuming that this GST is a inputable taxes and the input credit will be received and hence it is not form part of the cost of the PPNE. Okay. So what is my cost of PPNE? Purchase price plus import duty plus non-refundable purchase taxes minus trade discount and rebate plus directly attributable cost. What is meant by directly attributable cost? If this asset would not have been purchased, this cost would not have been incurred. For example, a company has purchased a machinery from China and the company has purchased and the company has paid the carriage inward, freight and transport for taking that machine from China to India and India to the Indian factory. So whether this freight is going to be capitalized as a part of the cost of PP?
Yes. To our premises and we can't use the machine.
Or if I can say like that, this freight and transportation would not have been incurred if I would not have purchased the machinery. Yes or no?
Yes, sir.
Agreed.
Yes. This
So I
transportation
have a
cost,
question.
this transportation cost has incurred. Why? Because I have purchased a machinery and for getting this machinery ready for use, for getting this machinery available for use, I have to incur this transport and freight cost, right? So what is a directly attributable cost? Directly attributable costs are those costs which can be avoided if that asset would not have been purchased, and directly attributable costs are those costs which is necessary for bringing the asset available for use, What could be the example of directly attributable cost? What could be the example? Installation cost, cost of site preparation, delivery and handling cost, freight, professional fee, trial run expenses, cost of testing is also a directly attributable cost. So cost directly related to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management, right? Yes, somebody has a question. Yeah.
Yes, sir.
Who's there?
Sir, Sir Shweta here. So I just
Shweta,
want to ask if a machine is purchased by an unregistered person, then GST will be including the cost of the machinery.
see, again, if question is silent, you have to write the assumption. The question is not testing your GST knowledge. The question is testing your Ind AS 16 knowledge. So you have to write an assumption. But since you are a chartered accountant, you are appearing in CA final exam, you know that we have purchased from unregistered buyer. And I will not be able to avail the input credit, so it is a cost to me. So in that case, you will capitalize that GST amount as a cost of your machine, correct? As a cost of
Okay, sir.
PPE.
Thank you.
But it's always good to clarify. What you want to do, please do, but please clarify if question is silent. But if question is clear, the question will tell you. For example, the company will claim the input of this GST paid. Then what you will do? You are not required to write any assumption because question is clear. In that case, you will not take the GST amount as a part of the cost of the asset. Correct? Or if question will say that the company will not be able to avail this GST, then you have to take it as a part of the cost of the asset. Plus directly attributable cost plus initial cost of the decommissioning. Cost of decommissioning. What is cost of decommissioning? Let's say Telecom Tower Company, Bharti Airtel, Indus Towers Limited, Vodafone Idea, Reliance Jio. They are installing tower either on the roof or on the land of the landlords, because they have not purchased all the houses. Wherever you have seen the tower, whether it belongs to those companies, Reliance, Vodafone, Bharti Airtel. Probably Shweta has a house and Shweta has given the rooftop to Reliance Jio for installing their tower. So house and that roof belongs to Shweta and the tower belongs to Reliance Jio. So Shweta has given the rooftop. Shweta has given the rooftop to Reliance on a lease basis. Reliance is paying rental to Shweta. And there is a lease agreement for 20 years. Shweta told Reliance that whenever you will go from this place, you have to clean my roof and you have to return my roof in the same condition in which I have given it to you. Means whatever civil work you have done, whatever construction you have done, you have to demolish that. You have to clean this site. You have to decommission your tower and give my roof in the same condition so that I will be able to fly the kite. Correct, Shweta?
Yes, sir.
Okay.
Yes.
So in that case, Reliance has a cost. Cost तो आएगी ना? Decommission, dismantle करने की. So standard says that if you are installing a physical asset and at the time of installation it is clear, and generally these kind of thing happens at a leasehold land, and the cost of decommissioning is clear that it has to happen, that estimated cost of decommissioning is also going to become part of the cost of the asset. And as per Ind AS 37, you have to create a provision and that amount is going to be capitalized as a part of the cost of the asset. So friends, example, Reliance Jio has estimated that Jio is going to incur a decommissioning cost, site restoration cost of rupees 1 lakh after 20 years. So what is the cost which is going to be capitalized as a part of the cost of the PP&E? 1 lakh rupees? Yes or no? This 1 lakh rupees, the estimate 20 years after. This decommissioning restoration has to happen after 20 years, not today. So what should I do? Present value, guys. Ind AS में time value is important. You have to apply a discount rate. अगर आज से 20 साल के बाद 1 लाख रुपए चाहिए तो आज कितना चाहिए? 1 lakh divide by 1 plus 10% to the power 20. मतलब आज कितने पैसे जमा करूं कि 20 साल में 1 लाख बन जाए? So for example, it comes at 15,000, 15,000, 15,000. So that 15,000 will become part of the cost of the asset. What is the accounting entry? Decommissioning cost, PP&E account debit to provision for decommissioning cost. And what will happen with this 15,000? It will be depreciated. When it becomes cost of PP&E, it has to be depreciated over the life of 20 years. But what happened with that provision for decommissioning liability of 15,000. This provision will require after 20 years. So what happened with this 15,000 rupees of provision?
So it
Friends,
will increase the cost of
it will
machinery.
be
Increase the cost of machinery every year.
no, that is clear. So let's say, I hope my Excel is visible. For example,
Yes,
Yes.
sir.
the company Reliance Jio installed tower, okay, and incurred cost of rupees 25 lakh for 25 lakh. The life of tower is 20 years. The life of tower is 20 years. Okay. The life of tower is 20 years. As per the contract, this tower needs to decommission and the space has to be given in the same condition in which it was provided to Reliance. In which it is provided to Reliance Jio. Okay. The discount rate is 10%. Explain the cost of tower, okay, cost of the tower, and also pass necessary journal entries. Okay, fine. So what is the formula of the cost of PP&E? Purchase price plus import duty plus non-refundable taxes minus trade discount and rebate plus directly attributable cost plus cost of decommissioning. So cost of PPE. Purchase price or construction price, whatever, right? So let's say purchase price. What is my purchase price? What is the purchase price? क्या है? Purchase
25
price
lakh.
क्या है?
Total purchase 25.
25 lakh. 1, 2, 3, 4, 5. 25. What is my directly attributable cost? Nothing is given. The total cost is 25 lakh. What is decommissioning cost? Decommission cost कितनी होगी? कुछ दिया है क्वेश्चन में?
नहीं.
The estimated decommission cost will be expected to be rupees 2 lakhs. तो 2 lakh rupees decommission cost होगी, right? Total cost of PPN is 27 lakh. Yes?
Yes.
No. ये 2 lakh rupees cost after 20 years है.
So
You have to arrive at
present value of
value.
2 lakhs. Present value of 2 lakhs.
Yes. So what is my present value of 2 lakh? You need to compute present value of estimated decommissioning cost.
32,701.
So 2 lakh divide by 1 plus what? 1 plus 10% to the power what?
20.
20.
29,729.
29,729. What is the cost of PP&E? What is the cost of PP&E? Cost of PP. How much is the cost of PP?
Total of this
25 lakh 29,729. Yeah.
729. What is the accounting entry? What is the journal entry? Journal entry बताओ फटाफट. Tower PP&E account debit. By what amount? Debit तो बता दो कितने से होगा. इसी से होगा ना. This is the
Yes.
cost of PP&E.
Yes.
Yes, sir.
Two what?
Bank.
Two
Bank.
bank. Two bank by the entire amount.
25 lakhs.
No, sir. No, sir. 25 lakh.
25 lakh. Yes. And what about this remaining two?
Provision for
Provision.
Provision for
Because this money,
decommissioning.
yes, provision for decommission. Money is going to incur not today, after 20 years.
20 years.
Okay. So this 25,29,729 is going to be depreciated, right? For 20 years, it becomes zero. What about this provision for decommission?
Provision for decommission
will
account
increase
debit
by
to bank.
10% every year.
So depreciation schedule. Depreciation schedule. What is my depreciation schedule? Year. Amount. कितने साल में depreciate होगा मेरा PPE?
20 years.
20 years. 20 years, yes. It will be depreciated in 20 years. And what is the depreciation value? What is the depreciation amount? Using straight line method, same amount. 25,29,729 divide by 20. Same amount, right? Same amount होगा ना?
Yes.
The total should come out 25,729. The total should be 29,729. What is my provision schedule? Provision for decommission schedule.
Excuse me, sir, I have a question.
Yes.
Sir, provision will increase every year, so the cost of asset will also increase?
No.
And depreciation accordingly?
No, madam, no. Right. So PP has to be initially recognized at cost. So at the time of initial recognition, you have to do this computation. Now provision will run. How provision will run? Let me tell you. Opening balance, interest cost. Is there any payment? Closing balance. कोई पेमेंट होगी क्या हर साल? लास्ट में होगी.
नहीं.
What is my opening balance of provision for decommission?
29,729.
29,700. What is my interest cost? The interest cost will come at the same rate with which you have discounted. Now you have to unwind the discount. Multiply by 10%. Zero payment.
Yes.
What is the closing balance? This plus this minus this. 20 year के end पे क्या होना चाहिए इस calculation में? This provision should become
0.
how much?
0.
2 lakh.
Oh, 2 lakhs.
Zero कैसे होगा? 2 lakh बनेगा ना, 2 lakh की पेमेंट होगी फिर 0 होगा. Yes. 10%. So let me drag this by 20 years. What is the value of this provision? 2 lakh at the end of the year. And when you will pay 2 lakh, so debited and bank will be credited. So the difference between 29,729 and 2 lakh, what is the difference amount? What we'll call this difference amount? We'll call this difference amount as interest cost. This 172.71, the total interest is going to be debited in the statement of profit and loss. And this 25,29,729 will be debited in the profit and loss as a depreciation. Okay. So this is the total of, and what is the total amount? Total amount is 27 lakh. What is the total outflow? Total outflow kitna hai? What is the total outflow? भाई कंपनी की जेब से कैश कितना जाएगा रिलायंस की जेब से?
27 lakh.
27 lakh, 25 lakh today and 2 lakh after 20 years.
20 years.
So if the company will spend a cash of 27 lakh, then what should be the charge in the P&L over a period of 20 years?
Interest and depreciation.
नहीं, टोटल कितना होना चाहिए? अगर कंपनी की जेब से 27 लाख जा रहा है तो पूरे 20 साल में कितना चार्ज होना चाहिए? 27 लाख पीएनएल में तो उतना ही आना चाहिए ना?
Yes, sir.
So this out of 27 lakh, 25, 29, 729 is coming as a depreciation over a period of 20 years, and 172, 71 is coming as a interest cost.
Interest
What is
cost.
the total of these two numbers? 27 lakh. Right? Is that clear? Is that clear?
Yes, sir.
Yes.
So now let's discuss question number 2. Okay. So we have already discussed the concept of we have revised the concept of the cost. X Limited started. I hope the question number 2 is visible from this Excel file.
Yes, sir.
Sorry, Word file. X Limited started construction on a building for use on 1st April 20x0. The following costs are incurred. Purchase price of the land. This is amount in rupees. Amount in rupees. Purchase price of the land. Is it a PP or not?
No, sir.
Purchase price of land is not a PP.
The PPE.
So it's
It's a PP.
Land,
It's a
no?
property, plant and equipment. It's a property plant. It's a fixed asset. It's a property, plant and equipment.
yes, sir.
Land cost. Yes.
Yes, sir.
Stamp duty and legal fee. So company started construction on a building. Building की construction किस पे होगी? Land पे होगी. Land क्या है? PPA नहीं है. Building क्या है? Building भी PPA नहीं है. करें? तो लैंड पे बिल्डिंग कंस्ट्रक्ट करने के लिए लैंड की कॉस्ट हो गई. स्टैम्प ड्यूटी एंड लीगल फी. Is it a directly attributable cost?
Yes.
Does it form
Yes,
part of the cost? Yes.
Yes, sir.
Architect fee. Architect fee is
Directly
also a directly
attributable.
attributable cost. Site preparation.
Direct attribution.
It will be added or not added to the cost of the PB?
Added.
Added. Material. Brick.
Added.
No.
Cement. Added. Direct labor cost.
Added.
General overheads.
Not added.
General overheads not added. So
Not
standard
added.
says that what is not part of your cost. The examples are not part of the cost is cost of conducting business in a new location or with new class of customer. For example, training cost incurred in introducing a new product or service. Okay, or cost of opening a new facility. You are giving a brand promotion charges to Salman Khan and Amitabh Bachchan for rupees 5 crore to launching a product or to promote a product or to inaugurate a factory, inaugurate this building. So this is not part of the directly attributable cost. Administrative and general overhead cost, abnormal cost, these are not part of the cost of the property, plant and equipment. These are not the directly attributable cost. Okay. So whether this general overhead cost is part of the cost of the asset?
No.
Is it part of the cost of PP?
No, sir.
No. Where it will go? It will go to P&L.
P&L.
Other relevant information is given. Material costing. This other information is very, very critical. Remember, the question in the examination, when you are sitting in an exam hall, the table which will give you the picture was very simple, but the information below the table is very critical and complex, right? So material costing, but not to worry. If your concepts are clear, your revision is proper, and you will read line by line. You will read line by line and start interpreting, not concluding, interpreting the question. It will become very easy, right? And you have seen that I'm going line by line just like a student. Okay, just like a student. Other relevant information: material costing rupees 1 lakh had been spoiled and therefore vested, and further 1,50,000 was spent on account of faulty design work. There was some problem, some wastage, right? So already 1 lakh rupee of material got spoiled, and now the company has to spend 1.5 lakh rupee on the design work of this building. Tell me what will happen. So, the total material cost was 10 lakh rupees. The total material cost was 10 lakh rupees. So this 1 lakh rupee material got vested. So what to do now?
Yes.
क्या
We will
करें?
From 10 lakh, only 9 lakh will be considered as a direct attributable cost, and 1 lakh will be considered as a vestage and will be shown in P&L.
1 lakh will be
Shown in P&L.
sorry. So 1 lakh had been spoiled. This was the material, and a further 1.5 lakh was spent on account of faulty design work. So 1.5 लाख रुपए जो था वो भी faulty design work पे spend किया. So what is the total wastage?
2,50,000.
2,50,000 is the total wastage. So 1 lakh rupee had been spoiled and therefore wasted, and a further 1.5 lakh was spent on account of faulty design work. This is very important. On the faulty design. I missed this word faulty. Faulty design. As a result of these problems, work on the building was stopped for 2 weeks during November 20x0, and it is estimated that 22,000 of the labor costs relate to that period. Is there any use? Is there any use of this 22,000 rupees?
Yes.
What is the use?
Reduce from the labor.
So basically this material and labor, these are the wasted amount, correct? So this labor was sitting idle because the work has stopped and the company has to pay 22,000 to these labors now. Okay. So this 1 lakh, 1.5 lakh and 22,000, this entire money is abnormal cost, and as per Ind AS 16, abnormal cost of labor and material has to be reduced from the cost of the PPE. Okay, and where it will go, it will charge to P&L. The building was completed on 1st January 20x1. 1st January 20x1. When it was started? It was started in 1st April 20x0. So when it was completed? 1st April 20x. 1st January 20x.
1st January.
Okay. The building was completed in 1st January, means after 9 months. 9 months हुए ना? 1st January 1st April को start किया था 20x0 को, and 1st January को complete किया 20x1 में 9 months, and brought in use. This building was available for use on 1st January, but brought in use on 1st April. Very important line. The loan carried an interest rate of 8% per annum. Sorry. X Limited had taken a loan of rupees 40 lakh on 1st April 20x0. When this land was purchased and the construction was started, this company had taken a loan of 40 lakh rupees on 1st April 20x0 for construction of the building. The loan carried an interest rate of 8% per annum and is repayable on 1st April 20x2. So when this building was started, loan was taken. Whether this information useful?
Yes,
Is there any
because
use
the
of this
interest is to be
information?
capitalized. Because the interest is to be
Yes.
capitalized.
Yes. So basically, the company has taken a loan for the purpose of construction of the building. It means till the time the building is available for use, this interest cost has to be capitalized. This is the use of this information. The loan carried an interest rate of 8% per annum and is repayable on 1st April 20x2. Assume that the entity did not consider the construction period as substantial period of time, as per Ind AS 23. Is there any use of this last line?
Yes,
That the
sir.
entity did not consider the construction period as substantial period of time?
Since it is not taking substantial period of time, so we cannot capitalize the interest, we will charge to P&L account.
Very good. Very good. Friends, as I told you, if you see the other information, this other information is quite confusing. And when I'm saying quite confusing, I'm not talking about the construct of the language. I'm not talking about. I'm talking about from the understanding perspective of the students. They got confused. Like first line was talking about spoiled. The second line was talking about spent on faulty design work. Means 1 lakh has vested, 1.5 lakh has vested. Then the third line was talking about the work has not happened for 2 weeks. 22,000 rupees has been spent on the labor. So again, this was abnormal vested amount of labor. Okay. And this building was completed on 1st January 20x1 and brought into use on 1st April 20x1. What is the relevance of this information? Available for use was 1st January. Ready for use was available for use was 1st January and put to use is 1st April. What is the relevance of this information?
It will be recognized in a January X1.
So the capitalization date, the initial cost is going to be capitalized on 1st January, not 1st April. And the depreciation will start from 1st January, not 1st April. So available for use is the concept in Ind AS. Put to use concept is in income tax. Okay. Then the standard has given, then the question is given you the information on the loan taken, etc., etc. And then the question itself is saying this construction period is not considered as a substantial period of time. So most of the student, without reading the last line, they started computing 40 lakh multiply by 8% multiply by 9 by 12. This is the interest which is going to be capitalized. Most of the student, without reading the last line, that it is saying that the construction period is not considered as substantial period. And friends, qualifying asset are those assets which take substantial period of time for getting ready for intended use or sale. Right? If it is not substantial, it is not a qualifying asset. If it is not a qualifying asset, interest is not going to be capitalized. Okay. Calculate the cost of the building that will be included in tangible non-current asset as an addition. Now we understood the question. Let's answer this question. Only those costs which are directly attributable to bringing the asset into the working condition for its intended use should be included. Admin and general cost cannot be included. Cost of abnormal amount of wasted material and labor is also not included. Here the cost of spoiled material and faulty design are assumed as abnormal cost. Also, it is assumed that wastage and labor charges are abnormal in nature, hence same also not included in the cost of PP. Amount to be included in PP, what? Purchase price of the land, yes, we discussed. Stamp duty we discussed. Architect fee we discussed. Site preparation we discussed. Material 10 lakh minus 2 lakh 50,000. Abnormal amount. This 250 should go to P&L. Direct labor 4 minus 22. 378 should go to P&L. General overhead interest. Why interest is nil? Why? Because this time is not considered a substantial period of time. This is the total amount which is going to be capitalized. Okay. Have you understood this question? Very well.
Yes, sir.
Okay. So friends, it's 8:31 now. Let's have a 9 minutes break and we will start at 8:40. Okay. Yes. Now let's discuss a comprehensive question on the capitalization, right? So if in exam the question will come for 10 marks or 12 marks, so probably this question may come in exam. Question number 3. On 1st April 20x1, Sun Limited purchased some land for rupees 10 million, including legal cost of rupees 1 million, in order to construct a new factory. So the land was acquired to construct a new factory. So whether land is a PP or not? Land is a PP? It's a
Yes,
PP,
sir.
it's a fixed asset, it's a property, plant and equipment. Construction
Yes.
work commenced on 1st May 20x1. Remember, why this information is important when construction work commenced? This information is important because of interest capitalization also, if this will be in the question. Okay. Sun Limited incurred the following cost in relation with its construction. Okay. Preparation and leveling of the land. Preparation and leveling of the land. The site preparation cost, is it going to be capitalized? Is it a directly
Yes.
attributable cost? Yes.
Yes.
Purchase of material for the construction. Purchase of material for the construction.
Direct
Attributable cost.
attributable.
This material for the purpose of construction of building is going to be capitalized. Employment cost for the construction workers. The company has engaged construction workers. Labor cost, will it be capitalized?
Yes, sir.
Yes.
Yes. Overhead cost incurred directly on the construction of the factory. Overhead cost incurred directly. All the overhead cost are not excluded from capitalization. Only general overhead cost are excluded from capitalization, right? So overhead cost incurred directly on the construction of the factory is going to be what? It is going to be capitalized.
Capitalized.
This is a direct cost. Yes, this is a direct cost, right? This is a direct cost. Understood? Okay. Ongoing overhead cost allocated to the construction project using the company's normal overhead allocation model, 50,000 per month.
PNL?
Capitalize or not capitalize?
No,
Not
no, sir.
capitalized.
No.
Why no?
Because it is allocated. That means
Allocated.
indirect.
It means it was a general overhead cost and now it is allocated to the construction, okay, to this building using some normal overhead allocation model. So this is not going to be capitalized. So where it will go?
P&L.
P&L. P&L is the last destination. Correct? Income received during the temporary use of the factory premises as a car parking during the construction period is 50,000.
Not reduced, sir.
Indirect income.
So although so one thing is very clear, guys. So I am giving you practical tips here. When you are solving a question in exam and the question comes on the asset value computation, asset measurement, right? So whatever is the cost, it will become part of the cost of the asset, right? If it is an income, then it will reduce your cost or not? It will reduce your cost. Okay.
No.
So the first type of question, the first type of mistake the student is doing, what they will do, they will just read the number 50,000 rupees income received during the temporary use of factory premises as a car park. So many a times students are capitalizing this amount also, many a times, while it is an income. So one thing should be very clear, it is an income, not a cost, right? If it has to be considered, it will reduce your cost, correct? But whether it is required to be considered, that is a big question. So income received during the temporary use of the factory premises as a car parking, right? So when the construction was happening, part of the land was lying idle. He has earned 50,000 rupees by giving it as a car parking to the mall which is next to this company. So whether this earning a car parking is kind of it is directly related to the construction of this building?
No.
Answer is no, it is not direct.
No, sir.
So this 50,000 rupees in income which will take it to the P&L. It will not reduce your construction cost, right? Cost of relocating employees to work at the new factory. Cost of relocation. Cost of relocation. So the company has relocated the employees, the laborers from X place to Y place. I mean to say this construction place. And there is a cost of relocation. Whether it is going to be capitalized.
No, sir.
No. Big.
As I told you when I show you the directly attributable cost and the inclusion and exclusion both. So cost of relocation, cost of retraining, these are not going to be capitalized. Okay. Sunk cost. Cost of opening ceremony on 31st January 20x2.
No.
Mr. Amitabh Bachchan came and he has charged 1,50,000 rupees.
No, sir.
No, it is not going to be included. It will charge to P&L, right? So what you told, all these 4 items are not part of cost. It will charge to the P&L, right? This is what you are saying?
Yes, sir.
Yes. Now let's go to the first paragraph. After this bullets, the factory was completed on 30th November 20x1. When factory was started? It was started on 1st May. Construction was started on 1st May 20x1, right? So 1st May to 30th November. The construction completed on 30th November. How much? How many months?
7 months. 7 months.
7 months. 7 months, right? 7 months. Which is considered as a substantial period of time. Which is considered as a substantial period of time as per Ind AS 23, and production began on 1st February 20x2. What is the relevance of this line? What is the relevance? What is the use?
Interest part to be charged as a cost of concept.
Yes.
Cost of
So it is
PP.
saying that from 1st May to 30th November, if the company has taken any loan, which we are not aware of till now, correct? Abhi tak hame nahi pata. But reading this line gives us a thought that from 1st May to 30th November, it is a substantial period of time as per Ind AS 23, and whatever interest cost has been incurred, it has to be capitalized, correct? And production began on 1st February 20x2. The production started on 1st February 20x2. Yeah. So factory completed on 30th November and production started on 1st February. What was the date which was when the factory was available for use?
30th November.
What was the date when the factory was available for use?
30th November.
30th?
November.
30th November. Okay, 30th November is the date. Okay, why 30th November is the date?
Because factory was completed, so we can start production from that day also.
Okay. Yes. Yes. So let's move further. The overall useful life of the factory building was estimated at 40 years from the date of completion. From the date of completion. Okay. So the factory was ready to use on 30th November, while the opening ceremony happened on 31st January. Production started on 1st February, right? So overall useful life of the factory building was estimated at 40 years from the cost of the completion. However, it is estimated that the roof, so word has been just missed here, the roof will need to be replaced. However, it is estimated that the roof will need to be replaced 20 years after the date of completion, and that the cost of replacing the roof at current prices would be 30% of the total cost of the building. Important line. However, it is estimated that the roof will need to be replaced after 20 years. 20 years after the completion date. What is the completion date? 30th November 20X1. What is the date when the depreciation has to start? What is the date when the depreciation has to start?
First
कब से
December.
start होगा depreciation?
First
Sorry?
December.
1st December. 1st December.
से, yes, 1st December से depreciation start होगा. And it is saying that the roof is required to be replaced after 20 years. What is the life of the building?
40
40
years.
years.
40.
What is the replacement, major replacement which is going to be incurred after how many years? 20 years. Means
20 years.
This roof will be considered as a separate component.
Asset.
Separate component. So asset will be the factory building only, but this roof has to be capitalized separately in the fixed asset register under the sub component of factory building. And cost of replacing the roof at current prices would be 30% of the total cost of the building. So current cost of the roof, whatever is the cost of building today, 30% cost is the cost of the roof. तो हमें पता है cost of building अभी? Do we know the cost of the building?
We will calculate.
Do we know the cost of the building? No. So we have to compute the cost of the building, right? Okay. But one thing is clear, whatever is the cost of the building. For example, if cost of the building is, let's say 10,000. So what is my roof cost? Simple to hai. If my cost of the building comes out at 10,000, what is my cost of roof?
30%.
30%, 3,000. Correct. At the end of 40-year period, Sun Limited has a legally enforceable obligation to demolish the factory. Lease पे है 40 साल की. The Sun Limited has a legally enforceable obligation to demolish the factory and restore the site to its original condition. The director estimate that the cost of demolition in 40-year time, based on the prices prevailing at that time, will be 20 million. What does it mean? Director is saying that the directors estimate the cost of demolition in 40 years time. After the end of 40 year, the cost of demolition will come out as 20 million. Right? So do we need to do anything for this 20 million as of now? This is the estimated cost of decommissioning after 40 years. And what is the cost? Cost is 20 million, 2 crores. कुछ करना है इस information का? Abrikesh, do we need to do this? Use this information?
Yes, sir.
So this will be
For adding present value of 20 millions now.
Yes.
The
So we need to
component of-
compute. We need to compute what is the present value of present value today for 20 million, which is going to be spent after 40 years, right? And whatever is the amount, we need to capitalize this as a cost of PP, cost of factory building, and we need to credit provision for decommissioning. Okay. But for that, we need the discount rate. Yes, discount rate is also given. An annual risk adjusted rate, which is appropriate to this project, is 8%. And the present value factor of ₹1, which is payable after 40 years at an annual discount rate of 8%, is 0.046. Means if you spent 4 paisa, if you spend 4 paisa today, in 40 year at 8%, interest, it will become 1 rupee. So we got the present value factor. It is 0.046. So 0.046 multiplied by 20 million. It will give you what? It will give you the present value of the decommissioning cost, which is going to be capitalized as a cost of PP. Is that right? Is that right? You know, the relevance of this 5 line. The relevance of this 5 line is 20 million multiplied by 0.046. That's all. Right? Which has to be added to the cost of PP. Yes or no? Yes. Okay. Okay. So now the second last paragraph. The construction cost of the factory was partly financed by a loan of $17.5 million. Sorry, 17.5 million rupee taken out on 1st April 20X1. And so 17.5 million was the amount which was taken on 1st April 20X1. The loan was at an annual interest rate of 6%. Sun Limited received investment income of rupees 1 lakh on the temporary investment out of the proceeds. The loan of 17.5 million rupees is given. What is the use of this loan amount?
Capitalization of interest.
Capitalization of interest. And this loan was taken on 1st April 20X1. The construction was started on 1st May. So from where the interest is going to be capitalized? From where? 1st April or 1st May?
1st May.
So what will be the impact for the April month interest? April का भी तो interest जाएगा. Loan तो 1st April को आ गया.
अप्रैल का P&L में जाएगा.
So April interest will be charged to P&L, and this interest is going to be capitalized on 17.5 million at a rate of 6%. Multiply by 7 months is the capitalization date. 7 months is the capitalization period. Is that clear? Because 7 month कहाँ से आया?
Yes.
How this 7 month has
May
come?
to November.
May to November. 1st May to November. Compute the carrying amount of the factory on the balance sheet of Sun Limited as at 31st March 20X2. Explain the treatment of all the amount referred to in this part of the answer. What is the demand of the question? What is the demand of the question?
Carrying amount.
What is meant by carrying amount? Gross block minus accumulated depreciation minus accumulated impairment losses is equal to carrying amount. Perfect. Perfect है ना?
Yes, sir.
Yes, sir. Okay. So it means standard is not only asking the cost of the PP&E. The standard is asking the net block after depreciation. So you have to do the cost of PP&E calculation. You have to do the net block calculation, means depreciation, accumulated depreciation calculation also. So have you understood this question? Is there any part of this question which you have not understood? Anyone? If you don't want to speak, you can write on the chat box also. Any part of the question which you have not understood? Yeah. I hope you have understood. Yes. Okay. Let's solve the question. Let's solve the question. And see this big question, complex question, we will solve just like, seamless. No problem. First of all, what was the cost? Cost of land was there. And what was the cost of the land? So all these numbers are in thousands. Okay. In question, the numbers are given in millions. So here the answer is given in thousands. Okay. So what is the cost of the land? Cost of the land was, purchase of the land was how much? 10 million. 10 million is 10,000. So cost of the land is PP, right? Cost of the land is PP. Perfect. Then preparation and leveling cost we discussed. It is also part of the directly attributable cost. Material cost we discussed. It is part of that directly attributable cost. From where this material cost came? It is given 6.08 million, means 6,000, 80,000. Okay. What is my employment cost of labors? What was my labor monthly cost? My labor monthly cost was how much? Can you guys help me?
2 lakh
It was
into
2 lakh per
14
month. So 2 lakh per month. And what is the construction period?
7 months.
7 months. Because it was completed on 30th November. So what is the total amount? 2 lakh
14
multiplied by
lakh.
7, 14 lakh. 14 lakh, 1400,000. 1400,000. Same way, what is my direct overhead cost? It was 100,000.
7 lakhs.
So
Yeah, 700,000.
100,000 for 1 lakh for 7 months, 7 lakhs, 700,000. 700,000. And we discussed now allocated overhead use as a car parking, relocation cost, opening ceremony cost is not going to be capitalized. We discussed. Yeah. Finance cost. Now interest cost, which is going to be capitalized. What is my amount of the loan? What is my amount of the loan? 17.5 million. 17.5 million. So 17.5 million means 17,500,000. So what is my finance cost? 17,000. So let's say
It is 6,12,500 finance cost.
17,500 multiply by what is the rate of interest? 6%. What was the rate of interest in the question?
6%.
6% is the rate of the question. Right? Multiply by period of capitalization 7/12. I hope with this calculation, the answer comes out at 612.50 thousand.
Yes, sir.
Yes, sir.
Yes, sir.
17.5 million multiplied by 6% multiplied by 7.7/12. This is the answer which is coming. 7.5
Yes.
multiplied by 6% multiplied by 7/12. 612.5. Okay. 612.5. Right. This land was acquired on 1st April. The loan was taken on 1st April. But why we have started capitalization from 1st May? Why? Because the construction was started from 1st May. Right? So if you remember Ind AS 23, it talks about the commencement of capitalization will happen when 3 conditions will meet. The borrowing has to be done. The asset has to be acquired, and the construction activity has started. Activity necessary to bringing the asset into the working condition has to be started, right? Investment income, you remember there was an investment income also. So the company has taken a loan and the entire money will not spend on the first day. So the company has parked the funds into temporary fixed deposits and the company got some interest income. So whether the interest income out of the loan amount will be charged to income or will be reduced from the cost of PPE, from the borrowing cost. It has to be reduced from the borrowing cost. You incurred borrowing cost of 612.5 and you have received 100,000 of income. So your borrowing cost will be netted off, right? Demolition cost. What is the demolition cost? You remember 20 million was the cost of decommissioning, multiply by 0.046. It was given in the question, that 5-line paragraph. 20 million means 20,000. Multiply by how much? 0.046. 0.046. Multiply by 0.046. What is the amount? 920. The amount is 920. Correct? So what is the total? Total is 19,912.50 thousand. Friends, do you have any questions so far on this cost of the PP, total cost of the PP, cost of land and cost of building? Do you have any question? Please tell me. This is the comprehensive question on the capitalization on the cost of the asset. This is the comprehensive question. Let me know if you have any question. Shall I move forward?
Sir, what about that roof replacement?
Yeah,
We should
I'm
do
coming to that. So yeah, I'm coming to that. So, but whether the total cost is clear, total cost of PP is clear?
Yes, sir.
Yes. Now in the question, the concept, one of the item was given for the roof replacement. And what is the items in this total PP? The total cost is 19912.50. Tell me, what are the assets in this total cost? There are two assets. कौन से asset हैं? Land and building. The construction of the building is there and the land is there. What is the cost of the land? The purchase price of the land was 10,000, including a legal cost. So if the total value of the PPN is 19912.5, right, and the land was acquired at 10,000, what is the value of the building? What is the value of the building? 9912.50 na? 9912.50. Yes or no? अगर 19,000 टोटल की वैल्यू है, 10,000 लैंड है, तो 9,000 कंस्ट्रक्शन की वैल्यू है बिल्डिंग की. करेक्ट?
Yes.
And the life of the building was given at 40 years. So I should depreciate 19,912 over a period of 40 years. So whether I should depreciate entire 19,912 over 40 years, or I should remove the cost of the land separately and only building cost is going to be depreciated over the life of 40 years?
Only building cost.
Only building cost. Land has an indefinite life. Okay. So now I need to compute the accumulated depreciation. Now I need to compute the accumulated depreciation. Okay. So friends, now I have splitted this total cost into two parts, land and building. Whether land is going to be depreciated? Whether land is going to be depreciated?
No.
Answer is no. So land is not
Yes,
going to be depreciated. So computation of accumulated depreciation. Compute cost of land. Just a minute. Let me write here. Compute cost of land and building separately. Land is how much? 10,000, and building is how much? 9,912.50. Okay. So what is the cost of accumulated depreciation? What is the total depreciable amount? 99 total depreciable amount for the what? For building is 9912.50. Friends, you remember there was a roof component also. Life of the building was 40 years, but the roof component require a replacement after 20 years, and the roof cost was the 30% of the total cost. You remember? It was given in the question.
Yes.
So how do I compute my roof cost? Now I know the cost of the total building. How do I compute my roof cost?
30 or
Roof
70.
cost 30% of the total cost of the building. So my roof cost is how much? 9912 multiply by 30%. My other than the roof cost, what is my building cost other than roof? 9912 multiply by 70%. Correct? And what is the life of the roof? What is the life of the roof?
20 years.
What is the life of the building?
40 years.
40 years. So roof is going to be depreciated over a 20-year period, and the building is going to be, means other than roof, the building is going to be depreciated over 40-year period. Right. And friends, what is the depreciation till the year end? Why it is 4 by 12? Why it is 4 by 12? When depreciation will start? When depreciation will start?
1st December or 30th November.
1st December.
1st December. When the asset was available for use, not when the production was started. No. when the asset was available for use. Asset was completed on 30th November and hence it was available from 1st December. So 1st December to 31st March, 4 months. I believe you guys have understood the computation of this depreciation. So what is the total depreciation, accumulated depreciation? 107.38. Now what is the total cost of the PP? 19912.50. What is the accumulated depreciation? 107.38. What is the carrying value? What is the carrying value? Gross block, total cost minus accumulated depreciation. Okay, 19805.12 is the carrying value. Don't you think this question was quite simple? It was just like a cakewalk. Yeah? Yes or no?
When you are explaining, otherwise in exam pressure, it will be something else.
So see, it's a revisionary class, and in my main class, I haven't covered this question. I cover the small concept. I cover the other questions, right? But since it is a revision class, you know all the concept. So, and that is how I'm explaining, right? And when I'm explaining, this is how you guys need to interpret, read, and solve the question. In the examination paper, when you are reading, just put your notes, okay? It will help you. Like when you are reading, one thing should be very clear in your mind, that the construction started on 1st May and it was completed on 30th May, 7 months time, right? So 30th November, sorry. And the asset is available for use. So you guys should be aware the concept of available for use and put to use. 90% student got confused between these two concepts because in exam they remember, okay, put to use, put to use, put to use. The concept of put to use does not exist in Ind AS. Does not exist in accounting standard. It exists in income tax. For you, what is relevant? Available for use, ready for use is relevant. This is the date when the capitalization happen and the depreciation will start. Okay, is that clear? I hope it is clear.
Yes, sir.
Yes, sir.
Question number 4. Now let's come to the question number 4. An entity has a nuclear power plant and a related decommissioning liability. Now you guys are champion in decommissioning liability. Okay. The nuclear power plant started operating on 2xx1, 1st April. The plant has a useful life of 40 years. Its initial cost was 1,20,000, which include for decommissioning cost of 10,000, which represented 70,400 in estimated cash flows payable in 40 years, discounted at a risk adjusted of 5%. The entity's financial year ends on 31st March. After 10 years, the present value of the decommissioning liability has decreased by 8,000. The discount rate has not yet changed. Examine how the entity will account for the above changes in decommissioning liability in the 11th year if it adopts the cost model. I just read this question. What you have gazed out, what you have understood after reading this question. So just prima facie view. What you have understood after reading this question. I will take a pause and read this question little at a slower pace. But what is your prima facie view after reading this question? What is the ask of the question? What is the ask of the question? Friends,
Revise the
question
amount
चाहता
of
क्या है?
revise the amount of depreciation on decommissioning and its cost. Which
So the
which
question is asking about, yes, there is a change in the decommissioning liability. So this is a nuclear power plant which has a decommissioning liability. Life of the plant was 40 years. It means the decommissioning will happen, the outflow will happen. The outflow will happen after 40 years. But at the end of the, what is given? The entity's financial year end
10
of
years.
31st March after 10 years. So at the end of the 10 year, the estimated decommissioning liability has decreased. So this question is not asking you that how to compute the decommissioning liability, how to depreciate it, and how to unwind the interest discount and add the interest cost and make the liability full by the end of the year. Okay. This question is asking you how to treat when there is a change in the decommissioning liability. This is what the question is asking. Right? Right, friends? This is what the question is asking. Yes or no?
Yes. Yes.
So now I am reading this question again. An entity has a nuclear power plant and related decommissioning liability. The plant has a useful life of 40 years. Initial cost was 1,20,000. So what is the initial cost? 1,20,000, which included an amount of decommissioning cost of 10,000, which represented 70,400 in estimated cash flow payable in 40-year, discount rate 5%. So till the time I got three information. Information number one, the total cost of this PP on the day one is 1,20,000. Information number two, in this 1,20,000, 10,000 is the decommissioning cost which is inbuilt on the day one, right? And what is this 10,000? This 10,000 is nothing. It's a present value of 70,400 at a discount rate of 5% over a period of 40 years. Correct?
Yes.
This present value of 10,000 is equal to what? This present value is 10,000. This is the present value of 70,400 discounted at 1.5, discounted at 5% over the life of 40 years. Correct? Yeah. So the entity's financial year ends on 31st March. Okay. After 10 years, the net present value of the decommissioning liability has decreased by 8,000. The discount rate has not changed. Examine how this entity will account for the above changes. Okay. Let's see the solution. Friends, on 31st March 2011, this plant became 10-year-old. Okay. What was the cost of the plant? 1,20,000. What is the life? 40 years. So what is the accumulated depreciation up to 10 years? What is the accumulated depreciation? 1,20,000 multiplied by 10 divided by 40. Okay. So 30,000. 10 साल का accumulated depreciation क्या होगा?
30,000.
30,000 simple है ना? Simple. So if today you are capitalizing your decommissioning liability at 10,000 rupees, what will be your decommissioning liability? The present value of the decommissioning liability at the end of 10 years? What will be the liability at the end of the 10 year? 10 year के end पे carrying value क्या होगी? So let me compute this. Let me compute the carrying value. So carrying value of decommissioning liability at the end of 10th year. कैसे निकालूं? So present value at the inception was how much? 10,000. Discount rate, ये 10,000 तो क्लियर है ना, क्वेश्चन में गिवन है. डिस्काउंट रेट 5%. ओके. तो कैसे निकलेगी एट द एंड ऑफ 10 ईयर की वैल्यू? सो प्रोविजन फॉर decommissioning value at the end of 10th year is equal to what? Is equal to 10,000 divide by or multiply by?
Multiply.
Are you not clear on the present value calculation? So today value is 10,000. I need value after 10 years. multiply by
multiply
1 plus 5% to the power 10 to the power 10. What is the value which comes out? What is the value which came? The value came is 16,289. 16,289, right? So the value which came due to the unwinding of discount at 5% over the 10 years, the amount of decommissioning liability has increased from 10,000 to 16,300 approx. 16,289 is the number, right? On 31st March 2011, the discount rate has not changed. However, the entity estimate that as a result of technological advances, the net present value of the decommissioning liability has decreased by 8,000 rupees. So friends, what was the carrying value of this decommissioning liability at the end of the 10th year? What was the carrying value? 16,300. 10 साल के एंड पे प्रोविजन की वैल्यू क्या है? 16,300. 16,300. And now this liability has gone down to what?
by 8,000.
This liability has gone down by 8,000. It is given in the question after 10 years, the present value, the net present value is decreased by 8,000. It is given in the question. It is given in the question itself. Correct. So friends, standard says that whenever there is an increase, whenever there is an increase in the provision for decommissioning, so जब भी increase होगा तो क्या करोगे? Provision has to be increased. And where the impact will go? The impact will go to the PP&E. So subsequently, whenever there is an increase in the provision, so the liability needs to be credited and the PP&E needs to be debited. For example, आपने estimate लिया. Your estimate was after 40 years, if this liability will go up, so you will revise your estimate. So due to revision of estimate, when your liability will shoot up, the impact will go to the asset. But if your liability will be reduced, like in this case, the liability is reduced by how much of amount? The liability is reduced by what amount? It is reduced by 8,000. Okay. So if the liability has reduced, it is reduced by 8,000. Okay. Then the amount has to be credited to the asset. So whenever a liability is reducing, the impact has to be given to the asset. Your asset will be credited. Your asset will be credited, right? So whatever is the balance of the asset. So if the balance is there in the asset, so that asset will be credited. So following this adjustment, the carrying amount of the asset is 82,000. And how this 82,000 will come? 1,20,000 minus depreciation 30,000 minus 8,000. Okay. Which will be depreciated over the remaining 30 years of the life, giving a depreciation expense for the next year of 2,733. Okay. The next year finance cost for discount, for unwinding of discount will be 8,300 multiplied by 5%. Okay. Is this question clear or not clear? Anyone
Clear.
to whom this question?
Clear in mind.
Clear in mind? Very good. Is it clear in mind? Is it clear in mind for others also? Yes? Okay. Okay, perfect. So let's go to the question number 5. Let's go to question number 5. Heaven Limited had purchased a machinery on 1420x1 for 30 lakh. 10x1 for 30 lakh. Okay. Which is reflected in its books at written down value of 17,50,000 on 1st April 20x6. So what was the cost? The cost was 30 lakh. What is the WDV? Carrying value is 17.5 lakh after 5 years. The company has estimated an upward revaluation of 10% on 1st April 2006 to arrive at the fair value of the asset. Okay. So this company has opted for revaluation model. And when this company has done the revaluation, the company found that there was an upward revaluation of 10%. So if the carrying value is 17.5 lakh, what is the fair value? What is the revalued amount?
19,25,000.
And how do you arrive at 19 lakh 25,000?
By adding 10% to 17,50,000.
Yes. So 17 lakh 50,000 multiplied by 110%, right? This is the revalued amount. Okay. 10% top up कर दिया मैंने. Okay. Heaven Limited availed the option given by the Ind AS of transferring some of the surplus as the asset is used by the enterprise. So first, the question talks about the revaluation model. Then the question also talks about the utilization of revaluation surplus. Okay. On 1st April 2008, after 2 years, this machine was revalued downward. There is a downward revaluation. There is an impairment loss by 15%. And the company also re-estimated the machine's remaining life to be 8 years. So the remaining life of the machine is 8 years. On 31st March 2010, after 2 years, again after 2 years, the machine was sold for 9,35,000. The company charged depreciation on straight line method. Prepare machinery account in the books of Heaven Limited over its useful life to record the above transaction. So this question is talking about the revaluation model. This question is talking about the upward revaluation after 5 years, then downward revaluation after 2 years, then the sale of asset after 2 years. So 3 concepts are there in this question. Okay. So before answering this question, shall I explain the revaluation model concept? Yeah. Or should I directly answer this question? Tell me what to do.
Please explain revaluation.
Please explain. Okay. Yes. Friends, subsequent to the initial recognition, and before that, let me cover the exchange of asset and deferred payment concept also quickly, right? So friends, we have done the cost part completely. So when you are measuring the PP at cost, there is a concept of deferred payment term. For example, you are acquiring an asset at a deferred payment term. For example, I went to the car dealer and for buying a car. I told that I want to buy a car. What is the price? He told 10 lakh rupees. Abrakesh also went to the dealer to buy the car. And Abrakesh told that I don't have money right now. I'll pay you after 1 year. So he told the price 7 lakh rupees. So tell me, what is the cash price equivalent amount of this car? So Abrakesh is paying 11, I am paying 10. So at what value PP is going to be capitalized in the books of me and Abrakesh, both? For me, I have paid 10 lakh rupees. So what is the cost of the PP? 10 lakh rupees. But Abrakesh has paid 11 lakh rupees. So what is the cost of PP in the balance sheet of Abrakesh?
11 lakhs.
Sorry, 11 lakh. So the total amount paid by Abrakesh is 11 lakh. But what is the cost of the PP? PP has to be measured at the cash price equivalent. If Abrakesh would have done the payment in the normal terms, normal credit terms, what is the amount he would have paid?
10 lakh.
10 lakh rupees. Because the normal credit term is immediate. When you go to buy a car, when you got the key, before that you have to make 100% payment. At that time you have to make 100% payment. So the normal payment term is immediate. But he is paying after 1 year. So what is the cash price equivalent of the car? It is 10 lakh rupee. So the normal price is 10 lakh rupees. But what he is paying 11 lakh rupee. So whatever is the extra amount, the total consideration minus normal price, that will be charged to the P&L as an interest cost. Okay. That will be charged to the P&L as an interest cost. But If it is a qualifying asset, in that case, it will be capitalized as per Ind AS 23. Is that clear? Is that clear?
Yes, sir.
Exchange of asset. Friends, in case of exchange of an asset, when you are acquiring an asset by transferring an asset, standard says that if that transaction has a commercial substance, means you are not just exchanging the similar goods and services, right? So for example, the company has bought a car and the company has transferred a building. Okay. Company bought a Mercedes car and company transferred a building. Okay. So at what value that car which the company is getting, the car which the company is acquiring, at what value it is going to be measured in the books of accounts? Because the company has paid building, the company doesn't have paid cash. So standard says that whenever there is a exchange of asset, the cost of the asset acquired is measured at the fair value of the asset given up. The fair value of the asset given up. So whatever is the fair value of the building is there. So that fair value of the building will become the cost of the car, cost of Mercedes. So why we are considering fair value of the asset given up? Why not the fair value of the asset acquired? What is the reason? Your asset has to be acquired on the basis of consideration transferred. Yes. Just think about not have transferred the building. If you would have transferred the money, अगर कैश देते तो कार को किस वैल्यू पे रिकॉग्नाइज करते? The amount paid in cash to acquire the car. Amount paid in cash to acquire the car. Yes or no? Yes.
Yes.
जो आप पे करते हो उसी पे तो करते हो अकाउंटिंग. बट यहां पर यू आर नॉट पेइंग कैश. व्हाट यू आर पेइंग? You are paying in the form of building. So whatever is the fair value of the asset given up, that will become the cost of the asset acquired as a PP. Sir, what happens if the cost of the asset given up is the fair value of the asset given up is not properly identifiable, right? It is not measurable. Then you need to check fair value of asset acquired. Sir, what happens if the fair value of the asset given up as well as fair value of the asset acquired both are not there? Then, and it is not possible to identify also, then WDV of the asset given up will become the cost of the asset acquired, right? Okay, so that was for the cost part. Now we have come to the measurement subsequent to the initial recognition when you move to the reporting date. So friends, when you are at the reporting date, standard talks about two model, cost model or revaluation model. So you have to compute your carrying value using the cost model or revaluation model, right? There are two models. So what is meant by these two models? So the company can apply the accounting policy, either cost model or revaluation model to the class of asset. You understood what is meant by class of asset? Class of asset means the asset which are having a grouping of the asset having a similar nature and use in the entity operations. The company has 4 office building and the company has 3 factory building. Tell me how many class of assets are there? The company has building and 3 factory building. In this case, tell me how many class of assets are there?
Two, factory building and machinery.
Office building. Yes. So there are 2 class of asset. The company has 4 office building. This is 1 class. The company has 3 factory building. This is 2nd class. Okay. So what is meant by, what are these buildings? All these 7 buildings have been bifurcated into 2 class, office building, factory building, right? A grouping of asset of a similar nature and use in an entity's operations. A grouping of asset. This office building has a similar nature and similar use. This factory building has a similar nature and similar use. Okay. So friends, this is the class of asset concept. Now, the company has decided to apply a cost model to all the office building and revaluation model to all the factory building. Is it allowed? Is it allowed?
Yes, sir. Class-wise it is allowed. Otherwise, I mean, within the
Class-wise
class,
it is allowed. Yes. Class-wise it is allowed. So the company can apply a different accounting policy, be it a cost model or revaluation model, by class of asset, by class of asset. But the policy has to be consistent for all the asset within the same class. For example, if the company is fair valuing, if the company is doing a revaluation of one office building, all the 4 office building revaluation is required, right? If the company has opted the cost model for one factory building, for all the 3 factory building cost model is required, right? Is that fine? Okay. So we understood that there is a cost model, there is a revaluation model. So the company needs to compute the carrying value using the cost model or revaluation model. If it is a cost model, what is the formula of carrying value? Cost minus accumulated depreciation minus accumulated impairment losses. If it is a revaluation model, it is revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses, right? Subsequent accumulated impairment losses, okay, is equal to carrying amount. Is that fine? So friends, whenever there's a revaluation model which is opted by the company, so the company has to do the revaluation at the end of the every year, right? The company has to arrive at a fair value. But whether every year fair valuation is required if the company has opted for a revaluation model. Standard says that if the major volatility is there, then the company has to do this fair valuation every year or the sufficient regularity. But if the major volatility is not there, so doing a revaluation in a 3 to 5 year is more than sufficient. Okay. Then standard says that whenever the company is doing a revaluation, there is an increase in the revaluation. Where that increase will go? The increase will go to the revaluation surplus in OCI. And if the company is doing the revaluation for the first time and decrease is there, decrease from the carrying value, where the decrease will go? The decrease will go to the P&L as an impairment loss. याद है ना आप लोगों को? Yes or no?
yes, sir.
For example, the company has acquired a PP. The company has acquired a car for rupees 10 lakh. Life is 10 years. What is the depreciation value? What is the net block? What is the carrying value at the end of the first year? What is the carrying value at the end of the first year? 9 lakh. 10 lakh की गाड़ी है, 10 साल depreciation, 10 साल का life है. So every year 1 lakh is the depreciation. What is the carrying value at the end of the first year?
9 lakh.
9 lakh. The company has opted the revaluation model and the revalued amount is 9,50,000 at the end of the first year. So is this an increase or decrease? Increase.
Increase.
So gross block minus depreciation is 9 lakh. At the end of the year कार की value 9 lakh है carrying value. But उसकी market value 9.5 lakh है. So there is an increase. Company ने revaluation model opt किया है. So this 50,000, what is the accounting entry of this 50,000?
Machinery on budget 9,50,000 to OCI.
9,50,000 by, so car account debit by 9,50,000. Just think about
50,000,
it.
sorry, 50,000.
50,000 only. Yes. So when you bought a
Yes.
car, you made an accounting entry, car account debit, car PP account debit to bank account 10 lakh. Then you have charged a depreciation because 1 year has gone. So now you are charging a depreciation. Depreciation account debit to accumulated depreciation. Now the net block of the car is 9 lakh. So when you compare this carrying value with revaluation model with fair value, it is 9,50,000. So now you're debiting your car PP by 50,000, crediting the revaluation surplus OCI by 50,000, right?
50,000.
So
Yes.
vice versa, the carrying value of the car is 9 lakh, but the fair value has gone down and it becomes 8 lakh. What is the accounting entry? Carrying value of the car is 9 lakh and the fair value is 8 lakh. What is the entry? The value is increased or decreased?
Decrease.
Decreased. So what is the accounting entry? Impairment loss. Impairment loss in the P&L debit to car account. To car account, right? So impairment loss in P&L, revaluation surplus in OCI. But for example, in the first year, you have recorded a revaluation surplus of 50,000, right? In the next year, there was an impairment loss of 40,000. What is the accounting entry in the next year? When in the first year it was a revaluation surplus of 50,000, in the next year there was an impairment loss of 40,000. Again, when the company done the revaluation, the impairment loss of 40,000 has come. Yes, what is the entry?
First entry
So
will
loss
be
को adjust करेंगे revaluation reserve से.
So you will recoup. You will adjust your impairment loss to the extent of revaluation surplus available, right? So revaluation surplus OCI will be debited. Okay, will be debited, right? So it will be adjusted from revaluation surplus OCI, right? So OCI reserve. So basically, whatever is the revaluation surplus OCI, it will be reversed. Okay. So what is the entry? Car account will be credited and OCI revaluation surplus will be debited. Okay. So in the first year, there was a decrease. There was an impairment loss of 1 lakh. In the second year, there was a revaluation surplus of 80,000. What is the accounting entry? What is the accounting entry in the first year when there was a revaluation surplus? पहले साल में रिवैल्यूएशन सरप्लस की एंट्री क्या होगी श्वेता?
सर फर्स्ट ईयर में रिवैल्यूएशन रिजर्व है तो हम मशीन अकाउंट डेबिट टू रिवैल्यूएशन रिजर्व.
आपके माइंड में मशीन ना भर क्या है? मैं एग्जांपल कार का लेता हूँ, आप मशीन बोलते हो.
कार
car PP account debit to revaluation surplus OCI. Okay, 1 lakh. In the next year, there was an impairment loss of 80,000. Whether this impairment loss will go to P&L? No. So impairment loss will be adjusted to the extent of revaluation surplus available, right? Yes. So revaluation reserve OCI will be debited by 80,000 and car will be credited by 80,000, right? So vice versa, both ways. If there is a revaluation surplus available, there is an impairment loss, it has to be adjusted to the extent surplus is available. If there is an impairment loss, then there is a revaluation surplus. So that impairment loss will be adjusted. Okay. Like, sorry, in the second example, what example I have taken, in the first year, there was an impairment loss. What was the entry for impairment loss?
Impairment loss to car.
Impairment loss in the P&L to car, right? Impairment loss in the P&L to PP&E. And subsequently, there was 80,000 of revaluation surplus. So where this 80,000 revaluation surplus will go? So again, it also says that if first time there was a decrease, you have recorded the impairment in the P&L, then there's an increase. So to the extent of impairment loss debited in the P&L, if the value will increase, right? So that will also charge to the P&L as a positive, right? So whatever P&L you have debited as an impairment loss to that extent, this revaluation surplus will go to the reversal of impairment loss in the P&L, right? ये clear है ना?
Yes, sir.
सर नेक्स्ट टाइम एंट्री कार टू इम्पेयरमेंट लॉस टू रिवैल्यूएशन रिजर्व ये हो जाएगा.
So for example, let me take you to the Excel file. Cost of the car 10 lakh. Life 10 years. 10 years. What is my carrying value at the end of
9.
first year?
9 lakh.
9 lakh. Now revaluation is happening, for example. So fair value in the first year. 9.5 lakh. Fair value in the second year. In the second year. Assuming 9.2 lakh. Ignore depreciation. For the time being, ignore depreciation. Okay. This is the carrying value. This is the fair value. So what is the entry in the first year? What is the entry in the first year for revaluation surplus?
Machine account debit to revaluation reserve.
Car account debit.
Car account debit to revaluation reserve.
Car account debit 50,000 to
Revaluation reserve.
revaluation surplus,
OCI.
which will go to OCI.
Yeah, OCI.
Revaluation surplus. 50,000. What is the entry in the second year? First year. Revaluation surplus. What is the entry in the second year?
Revaluation surplus to car.
There is a impairment. But whether we take it to the P&L, this impairment will take it to the P&L. Answer is no. We have revaluation surplus available. We will adjust this impairment from revaluation surplus. So what is the entry? Revaluation surplus. OCI debited to car. Car account. So what is the amount? 30,000. Same example. Let's take same example. Scenario number 2. Cost of the car 10 lakh, carrying value 9 lakh, fair value in the first year 8.4 lakh, fair value in the second year 9.2 lakh. Ignore depreciation. Tell me, what is the accounting entry in the first year? In the first year, there was an impairment. In the first year, there was an impairment. Impairment loss, P&L. Debit to car. By what amount? 60,000. Second year, what is the accounting entry in the second year? Second year, the value has increased. Accounting entry क्या होगी second year में?
Car account debit.
So अगर वैल्यू बढ़ी तो कार तो डेबिट होगी. चलो वो तो आधी एंट्री तो खत्म करें कम से कम, है ना? कार अकाउंट डेबिट. डेबिट बाय व्हाट अमाउंट? पहले डेबिट की एंट्री कर लेते हैं.
80.
So
80,000.
8.54 to 9.2, 80,000. Okay. It has increased by 80,000 to what? To impairment loss. Which impairment loss? To impairment loss. To impairment loss P&L, right? Credit. By what amount? जितना भी आपने किया था पहले, by that amount. Remaining, where the remaining amount 20,000 will go?
Revaluation surplus.
To revaluation surplus OCI. I hope this is clear to all of you now, right? I hope you guys have been remember this concept now.
Yes, sir.
Okay. Now let's speak to the yes.
Sir, I have a question. हमारे फर्स्ट केस में अगर सेकंड ईयर में कार का जो कॉस्ट कम हुआ है वो हमारे इम्पेयरमेंट लॉस से ज्यादा हो जाता है. 50,000 का हमें फर्स्ट रिवैल्यूएशन सरप्लस 50,000 हुआ था. अगर उससे ज्यादा का हमें हमारे फेयर वैल्यू भी कम आ जाता है तो हम क्या करते हैं?
ये in the first question.
Yes.
Can I take this as a 8.7 ले लूं मैं इसको?
Yes.
Is that okay? This is the question.
Yes, sir.
Yeah. So in the first year, car account debit to revaluation surplus OCI. It is clear.
Yes, sir.
In the second year, there is an impairment. What is the amount of impairment? So by what amount I should credit my car? So 9.5 to 87, 8.7. What is the amount? 80,000. The car value has reduced 80,000, right? But how much of revaluation surplus is available to us? Only 50,000.
50.
जितना क्रेडिट किया उतने से डेबिट करोगे, but you have credited your car by 80,000. Where the remaining amount will go? Where the remaining amount will go? Impairment loss in P&L. Impairment loss in P&L debit. By what amount? 30,000. 80 minus 50. Clear? Is that clear? Same entry.
Yes, sir.
So now let's do this last and the fifth question, which is there there on the screen on the Word file. So let's start solving this question. Is this question clear? In this question on 1420x1, the company has purchased a machine for 30 lakh rupees. The carrying value after 5 years on 1st April 20x6 is 17.5 million rupee. Right? 17,50,000 rupees. Okay. So 30 lakh, 3 million, 17.5 lakh, 1.75 million. And there was a revaluation surplus of 10% on 17,50,000, which is 1,75,000. And this company is also transferring, the revaluation surplus during the life of the asset to the retained earning. You know, utilization of revaluation surplus. There are two methods of utilizing revaluation surplus, right? So at the end of the life of the revaluation surplus, for example, whenever you are de-recognizing or selling your asset, whenever you are selling your PP&E, if any revaluation surplus is there, you can take the entire revaluation surplus to the retained earnings. Or you can also utilize your revaluation surplus during the life of the asset also. And how will you utilize during the life of the asset? So the depreciation on the revalued amount and the depreciation on the normal amount. For example, 1 lakh was the cost. Life is 10 years. What is the normal depreciation?
10,000.
10,000. If the amount, if the PP value was revalued to 1.5 lakh, now what is the depreciation every year? If assuming life is 10 years,
15,000.
15,000. So how much of depreciation cost has been increased due to this revaluation?
5,000.
5,000.
So standard says that the difference between the revalued amount depreciation minus the normal amount depreciation, which is 5,000. So to the extent of that amount, every year the company can transfer this revaluation surplus to retained earnings. Every year the company can transfer the money from revaluation surplus to the retained earnings. This is how the company can utilize the revaluation surplus. Okay. So it is written that this company has availed the option given by Ind AS of transferring some of the surplus as the asset is used by the enterprises. After 2 years, the machine was impaired by 15%. Okay. And the remaining life is 8 years. After 2 years, it was sold at 9,35,000. The company charges depreciation on straight line method. Okay. Prepare machinery account in the books of Heaven Limited over its useful life to record the above transaction. So should I prepare this machinery account? Yeah. Will you help me? Will you help me in preparing the machine account? What is the first entry? What is the entry on first 420x1? What is the first entry? पहली एंट्री क्या होगी? Sorry?
Machine to bank. Machine
account debit to bank account. The first entry is machine account debit to bank account. On first 420x1, it is machine account debit to bank account. On first 420x1. Okay. Now what is the second entry? So you have purchased the machinery. Now you will depreciate the machinery. What is the life of the machinery? What is the life of the machinery? Now you will depreciate the machinery. What is the life of the machinery? The life is not given. The life is not given, but the carrying value is given as on 1st April 2006. After 5 years, the carrying value is given. So can you compute the depreciation for 5 years?
Yes, sir.
It will be 30
I
lakh
see that.
minus 17 lakh 50,000 divided by 5. So it will be 12
Yes.
lakh
So
50,000 divided by 5. 2 lakh
5. Very
50,000.
good. Very good. So gross block was 30 lakh. The net block after 5 years is 17.5 lakh. It means what is the accumulated depreciation? It is 2.5 lakh. So every year you will depreciate 2.5 lakh. Every year depreciation to accumulated depreciation. So this is how 31st March X2, 3, 4, 5, 6. And now you have arrived at 31st March 2006, where your carrying value is, what? Your carrying value is
17,50,000.
17.55 lakh. 17,50,000 is your carrying value. Any challenge, any problem up to this level? Any problem up to this level, friends?
No, sir.
No. Okay. So now,
No, sir.
what happened? What happened? On 1st 406, the carrying value is 17.5. What is the revalued amount? What is the revalued amount?
19 lakh 25,000.
19 lakh 25,000. So what is the revaluation surplus? 1 lakh 75,000. 10% of 1750, right? What is the accounting entry? Machine account debit to revaluation surplus account. Okay. 19 lakh 25,000. Now what is the depreciation? Tell me on 31st March 2007. What is the depreciation which I'll charge? How much depreciation will I charge? कितना depreciation charge करूं मैं? बताओ. How much depreciation should I charge, friends? बताओ तो सही.
Sir, initially the cost of machine was 30 lakhs and depreciation per annum was 2 lakh 50,000. So if we'll divide 30 lakhs by 2 lakh 50,000, we can find out that the life of machinery was 12 years, out of which 5
Very good.
years have lapsed.
Very good.
So
Very good.
7 years is
Fantastic. Yes, fantastic. So first you compute the depreciation by comparing the gross block and the carrying value at the end of the 5 year. There was no any change between these 5 years. So you compute the amount per year. Once you computed the amount, 30 lakh is the cost, 250 is the per year amount. So you got the life also. 30 lakh divided by 2.5 lakh. What is the life? 12 years becomes the life. 12 years are the life. So out of this 12 years, if 7 years has already elapsed, so on 1st April 2006, what is the remaining years? What is the remaining year? 7 years. So 17.5 lakh. Revalued amount become 19.25 lakh. So 19.25 divide by 19.25 divide by what?
7.
7. What is the amount you will get?
2,75,000.
19.25 lakh divided by 7, you will get 2,75,000. Right? So this is what should be the depreciation. सबको clear है या clear है? Is it clear or clear? This depreciation comes at 2,75,000. Your closing balance is 16,50,000, which is 19.25 minus 2.75. ये सबको clear है or not? Please tell me. Is it clear or not? Please tell me, guys.
Sir, clear है.
Is that clear? Okay. Okay. Right. Yes. So then, in the next year, there was no change. In 7-8, there was no change. Again, this depreciation will be 2,75,000. Okay. Right. So on 1st April 2008, on 1st April 2008, this is the opening balance. You understood na, carrying value. Opening balance minus depreciation is equal to carrying value, right? So now on 1st April 2008, this opening balance is 13,75,000. This opening balance is 13,75,000. Right? So what it is given, it is written that the machinery was revalued downward by 15%. So what is the value of this 15%? Whatever is the carrying value, compute the 15%. Compute the 15%, right?
2,06,250.
2,06,250,
250.
right? So 2,06,250. But we have revaluation surplus also. What was the revaluation surplus amount on 1st April 2006?
1,25,000. 1,25,000.
1,75,000 was the revaluation amount.
Sorry, 1,75,000.
1,75,000 was the revaluation amount. But one line was given that the company is transferring the revaluation surplus to retained earnings when the company is utilizing the amount. Company is using this machinery. So what was the depreciation initially? शुरू में कितना depreciation था revaluation से पहले? 2,50,000. Revaluation के बाद कितना depreciation हो गया? 2,75,000.
2,75,000.
तो कितना depreciation बढ़ गया?
25,000.
25,000. So for 2 years, how much? For 2 years, how much amount of revaluation surplus transferred to retained earnings? 50,000. 50,000. 50,000, right? 50,000. Okay. 50,000 is the amount. Okay. So if 1,75,000 was the balance in the revaluation surplus, what is the remaining balance in revaluation surplus? 1,25,000, of course. है ना? ये working note में भी देख लेते हैं. So working note says that amount transferred from revaluation reserve. Revaluation reserve as on 1st April 2006, 175. Remaining useful life 7 years. Every year 25,000. 2 years 50,000. So balance amount is 1,25,000. 1,25,000 of impairment will be adjusted on 1st April 2008 from revaluation reserve, and the remaining amount will be charged to the P&L. Right? Now, what is the depreciation? What is the depreciation now, friends? Depreciation क्या होगा? What is my depreciation?
146,094.
So book value on 1st April 2008 was 13,75,000. Okay. Then there was a 15% downward revaluation. So revalued amount is this much. What is the revised useful life? It is given in the question. Question में revised useful life दी हुई है. Remaining life 8 years. So 1168 divided by 8 years. This will give you 146,094 per annum depreciation. 146,094 per annum depreciation. Right? So what is the accounting entry? You understood the calculation of depreciation now. It has to be prospective. Whatever is the opening balance, so over the remaining life depreciation will be computed. Opening balance divided by the remaining life. Okay. So this is the depreciation. This is the closing balance, and this balance will become the opening balance. Right. Then on 31st March 2010, this asset was sold off. So first I'll compute on 1st April 9, this is the opening balance. This is the depreciation, right? So the amount which is received is 9,35,000. So what was the carrying value? The carrying value is 1022,656 minus 146. So whatever is remaining, it becomes the profit or loss. Okay. So let's see the computation of profit. It is not given. So how to compute the profit? How to compute the profit? What is the accounting entry? Bank account debit. Bank account debit. By what amount? 9,35,000. 2. Machinery credit. What is the value of the machinery? Can anyone tell me 1022 minus 146? What is the value?
8,76,562.
8 lakh
76,000.
76
562.
562. So machine is credited by 876, money is received by 935. It means there is a profit on sale. Profit on sale. What is the amount? 58 438. 58 438. Okay. Right? I hope this is clear to everyone.
Yes.
Is that clear? So friends, this was the concept of this entire, revaluation and everything. Now, quickly, I'll talk about the concept of depreciation, then I'll conclude the session. Okay. So depreciation, friends, depreciation is like an estimate. There are, depreciation is a depreciable amount allocated on a systematic basis over the useful life. And depreciation has to happen on the component basis. This we have discussed, like truck and engine, machine and turbine. Okay. So depreciation begins when it is available for use. You remember, we have applied this concept. You remember, it is not put to use. It is available for use. हमने ये concept 2 बार apply किया. Correct? So depreciation is charged till the point your residual value is greater than or equal to net block. Okay. Because the formula of depreciation is equal to cost minus residual value divided by useful life. Depreciation ceases when the asset is derecognized or held for sale under Ind AS 105. Right? Depreciation does not stop. Depreciation does not stop automatically when the asset is idle. Okay. There are 3 methods of depreciation: straight line method, WDV method, unit of production method. In straight line method, your depreciation charge is constant. In written down value method, it is decreasing. In unit of production method, it is on the based of usage. Okay. And the change in depreciation method will be considered as a change in estimate, and change in residual value is also considered as a change in estimate. The company used to review the useful life depreciation method at the end of every year. Okay. Is that clear? So this is what it is there. So I am not explaining you the concept, I am revising the concept. Okay. And your PP has to be derecognized if it is derecognized if it is disposed of, or when no future economic benefit is expected. And whatever gain or loss is there, it has to be taken to the P&L as other income or other expenses. Friends, quickly we'll do some multiple choice question and then I'll conclude the session. Yes. A change in depreciation method is a what? Change in policy, change in estimate, change in method, change in standard. What? Tell me quickly. What is the answer?
Change in accounting estimate.
It's a change in accounting estimate. Yes, it's a change in accounting estimate. Okay. Question number 2. When an asset is sold or disposed of, where is the gain or loss recognized? Asset disposal account, profit and loss, revaluation reserve, depreciation.
Profit and loss.
Profit and loss. Question number 3. Under Ind AS 16, how often should the useful life of an asset be reviewed? At least at each financial year, every 6 months, at management discretion, never. Just I told you.
Each financial year.
At each financial year, and the company has to review the depreciation method, useful life, residual value as well. How should an item of PP be initially recognized in the financial statement? At cost, at market value, at NRV, at fair value.
At cost.
It has to be initially recognized at cost, initially measured at cost, right? If one large asset has number of individual components with different useful life, how should this be depreciated? Treat as one asset, break down into different component, expense it all, treat as one asset, but disclose in the notes to the financial statement?
Treat as one asset but disclose in the notes to financial statement.
No. आप ये थोड़ी करते हो, ब्रेक डाउन करते हो ना, यू हैव ब्रेक डाउन इनटू डिफरेंट कंपोनेंट. यू आर नॉट ओनली डिस्क्लोजिंग, यू आर ब्रेकिंग इट डाउन, राइट? कंपोनेंट अकाउंटिंग तभी तो करते हो. Different component, if it has a different useful life, you have to depreciate those component over their useful life. B is the answer. Question number 6. Under Ind AS 16, which two subsequent accounting treatment are allowed subsequently to initial recognition? Cost model, present value model, cost model, revaluation model, fair value model, revaluation model, fair value model, cost model. Sorry. Cost model and revaluation model.
Cost model and
Everybody.
revaluation model.
When it is dashed that future economic benefit with associated with an asset will flow to the entity and cost can be dash measured, it should be recognized as an asset. What is the right answer? When it is
Possible reliability. Possible reliability.
when it is probable, not
D.
possible. When it is probable that future economic benefit will received and cost can be reliably measured. Right? C is the right answer. Question number 8. Which of the following is not an asset that falls under the scope of Ind AS 16? Tangible asset, asset held for the production supply of goods, asset held for sale in the normal course of business, asset expected to be used for more than one period.
Asset held for sale in the normal course of business.
It is inventory. C is inventory. Yes. Question number 9. When the revaluation model is used for PPA, the gain or loss should be included in income for the period, gain of from revaluation on the income statement, a revaluation surplus account in OCI, extraordinary gain or loss.
Revaluation
This account in OCI.
Which of these is an allowable cost of an asset under Ind AS 16? Professional fee, general overhead, initial operating losses, administrative expenses. Which of these are the allowable cost, directly attributable cost?
professional fees.
Professional fees.
Yes, A is the right answer, professional fees. And this is your favorite slide. Thank you so much, friends. I have done the entire revision of Ind AS 16 and I have also solved 5 questions which is given by the ICAI from the study material, right? In a detailed manner. I hope you find the class, energy and everything, very positive and you have understood whatever I've explained, right? Thank you so much, friends. And let me conclude the session. It's 10:15 now. Thank you so much. Bye-bye. Take care.
Thank you, sir.
So I'm better now, uppercase, and this is what you can see. In the last class, I have wind up at 9:15 and now I'm teaching till 10:15, right? So thank you so much. Take care. Bye.
Thank you, sir. It was a great session.
Yeah, session is over. Thank you.